Shit. First off, yeah, good morning, everyone. And then, yeah, there was a bank failure. Secret words. Good morning, John. Yay, bank failure. Yeah, another one. Just a regional few billion. Yeah, those are rookie numbers. True. But the weakest will fall first, right? You know, the 2 years back at 5%. I can wrongly rightish. I can hear you. How did it fail with BTFP? That's closed. Discount window and a whole year of them being able to hedge risk because they didn't. We've already, I mean, I went over this back in like my post in December, right? They're very hesitant to take on the hedges for the risk that they're carrying because it's quite expensive. And historically, they're incentivized to just blow up because someone will come in and bail them out. Hear me out. What if they just didn't hedge? Yeah. Yeah, that the hedges are the hedges for that interest rate risk are pretty like uncommon. Not only that, where they do exist, they are insufficient. I don't even think they're on the FDIC banks at risk list. Yep. It's almost like the Fed and the FDIC probably aren't paying attention to the full scope of risk present. But I think we've known that for some time, right? Because their decision making doesn't make sense if they understand the full scope of the risk, right? Which means that they probably need to fix their models. Are they paying attention to anything? Besides Pornhub? I mean, I will say that probably takes a lot of time up every day for government employees, civil servants, if you will. That's the SEC. Do you think the Fed's immune? The Fed's just into X hamster instead. It's one premium membership or the other. It doesn't really matter. Yeah, cost of risk on them, failure cost on taxpayers. Yeah. Are all of the comments on this site's federal employees? Probably. Yeah. Socialism for the rich, capitalism for the poor. Yeah. Feudalism for the poor. Okay. I mean, depends what level you put poor at. I don't think homeowners are rich. I mean, they think they're rich, but they bought a home, so let's not assume too much. FOMC spicy this time around? Might be. Yeah, we might get some we might get a hawkish pivot. I think the Fed, like, if we had a gauge of the Fed between, you know, sitting on their hands, raising rates, or cutting rates, they're probably closer to raising them. But that also, I mean, that also leads one to ask the question, how how aware is the Fed of, the currency risk between USD and JPY? And I think recently more so, right? I mean, we're getting very close to the yen needing, international intervention, not just intervention from like the Ministry of Finance or the BOJ. They're having a hard time sustaining any kind of inflation, right? Which leads to a scenario where they don't want to cut rates. I mean, Tokyo CPI is not really representative of all of Japan, but it gives a bit of a hint at the direction that their inflation is headed, and it was very low on this last print. Um, Big drop, and if they don't have a steady rate of inflation or a path to a steady rate of inflation, it makes it very hard for them to raise rates without a ton of political pushback. Not that they're truly influenced by that, but also, the falling yen benefits Japanese multinationals, which are, responsible for a significant portion of their GDP. And so there's private interest incentives as well. And the Bank of Japan is historically acted in the interest of Japanese multinationals, right? Nice, RC's newest bag holder. Happy birthday. I don't think we're going to get a market crash tomorrow, but I don't think we're further away from one than we were a week ago. Which I kind of went into a rant about last Friday, maybe, for a little bit. But I mean, there's a lot of. If you look around on like Reddit and FinTwit, there's a lot of sentiment that everything's still fine. And this correction didn't really change anything, but fundamentally, there's changes in volatility dynamics, the bond markets, and currency dynamics that have not reverted back. Financial conditions are no looser now than they were. And this is kind of the setup that you see when a new normal is expected, right? Or like kind of like that everything is fine rally before everything turns to shit. Um and it's something we've definitely seen in the past. Market participants after such a huge bull run are very unlikely to change their sentiment quickly, right? Like it's going to be hard for them to become fearful, and we've seen that. We've seen excessive dip buying. We've seen short vol willing to lever up literally to the tits. um and yet yen's at 158, dollars at 106. The top end of the yield curve is high, more so than the top end of the yield curve. We've got like the 2 year and 6 month at 5.4 and 5%. No one's expecting, like, the bond market's not expecting any rate cuts. There's no immaculate disinflation, right? There's no soft landing. It's all gone. And here we are, fucking 6 months later with the market at all-time highs. And not only has nothing changed since October, things have only gotten worse. No problem, man. There's a lot of pink washing in our economy, technology, etc. All of those subreddits are full of morons. he needed to shock the market to save the market, and he failed horribly. No, he needed to not align himself with the Treasury's short duration issuance that, was gobbled up by money market funds, and he needed to push financial conditions significantly tighter for an extended period of time. And that's something they really, really failed to do. They did it successfully for a period in 2022, and we enjoyed the effects of that financial tightening through a lot of 2023, but it was insufficient to achieve the goal of price stability, right? So, you know, we've been left with a Fed whose focus has been on labor, and price stability has been ignored for too long, and now inflation is on the rise again, except government spending is no longer fueling sufficient growth to ignore it or to call it productivity. And so now, you're ending up in a situation where government spending is just directly fueling inflation, which is very, very bad, right? He needs to shock the market. He needs to create fear, and he's been extraordinarily unwilling to do that. It's it's bad. And now it's very obviously catching up and biting them in the ass. We've got PCE on the rise year over year with a declining base effect, right? So the effects of, rising inflation every month are going to be felt far more in those annual non-seasonally adjusted numbers, right? Which we saw with the PCE print. Um, we're not in a position we're not in a position to get rates substantially lower without creating some pain. His precious banks will fail. Yeah, but I think they were prepared for that, right? That's why they closed BTFP instead of extending it out another year. Um, was they don't want to take on the bags, right? They're already bleeding um a pretty significant amount every year. And I don't really think they're in a position to take on the bags, honestly. They've barely got their balance sheet down, and they've got a long way to go. So, Republic First reported decline in deposits in a presentation last year, which also indicated that their mortgage loan portfolio had declined substantially. Um, I think this is probably an effect that we're going to see among more and more banks as people become unwilling to take on home loans at 8%. You get a more cash rich market, but not a lot of mortgage lending, right? um they were supposed to wind down and exit the mortgage business and focus on consumer deposits, 60% of which were uninsured as of last June. They got a 35 million investment in 2022. Then the investment group backed out in Feb after they failed to hold a shareholder meeting. And they had apparently bet very heavily on receiving the cash infusion from Norcross, which they didn't get, right? So they were seized by the Pennsylvania Department of Banking, and Securities, and then I think they're leaving it at the state level for now. They weren't very big. I mean, 6 billion in assets, 4 billion in deposits. Who knows where their leverage was, but it's the first, I think it's the first regional bank to fail this year. But I think the FDIC is stepping in to ensure depositors are covered. I heard bank failures catalyze year-long rallies in the S&P. I don't think this one's that big of a deal, and it's fairly small, right? Asset-wise, but it's definitely a canary in the coal mine, right? We see this every time the 10-year starts to get near like 4.7, 4.8, right? We just start seeing banks collapse. Probably international ones we're going to see go down as well. Like I know in October we got that one British bank that was like 100 billion or something like that. And if they have enough assets, they can offset some of that risk, right, with their equity holdings and with their net interest income. But these smaller banks are super fucked unless they have a solid balance sheet. The new normal, I guess. Everything in the market right now is far from normal. But let's see, we got about 40 minutes till we have to till like JFresh and Dork hop on and we really start digging into all of the macro shit. So why don't we get some of the like memes and Mag 7 out of the way? I think we can run through those pretty quickly. Biggest banks are Meta, Nvidia, Amazon, Google, Microsoft. They definitely have better balance sheets than most of the big banks. GME's got a little bit of covering into the end of the last week, and we're going into the ETF FTD period, so there's a chance that that could continue. Although, if indexes are falling during that period, I expect most of the ETF and underlying FTDs to just get netted out. There's no like XRT on Reg Show. There's not significantly compounded failures in the underlying. There's barely any fucking delta on the options chain. GME is overall pretty boring still. So don't be surprised if this tiny rally fizzles back out. It very well could. And I would expect to see more downside if that were to happen. Upstart actually looks pretty interesting. It's been fairly illiquid for a while, which is something Upstart's not very, very good at doing, right? Because it's already so substantially illiquid anyway, and its ETF exposure is still better than it was in 2023, but still very, very low. The rebound here off of the low at $21 has been pretty stable. Options interest as of the end of last week had been improving on it. And we're starting to see a little bit of inflow into short puts. Generally, increases in short puts tend to propagate fairly significant runs as short calls are shed. Delta neutral on Upstart is at 23.73. A cross of delta neutral would put it in a positive delta and gamma environment, where I would say that the top side range is about $28 to $29. Um, and given that it's the ETF FTD period, it's a very good time for this to happen. However, earnings are coming up, and if those are as bad as the prior earnings, which were very good, and the outlook continues to be bad, which it very well could, because remember, financial conditions are still tightening, then we may get selling in the underlying like we did at the prior earnings, and that's pretty bad, right? So a lot of risk packed into any positioning, especially around right now. I would say I would be looking to play anything on it to the upside before the earnings report is released, and then I would plan to be out of positions by the time earnings came online. And the benefit there too is that there's a lot of short vol on the chain, and as the risk premium is priced in for earnings, that short vol is going to be encouraged to pull back a little. And that's something that we did see into the prior earnings, right? As volatility increased, the short vol positioning pulled back pretty substantially. I mean, it doesn't look like a huge run here on the chart, right? But it was about 20% at its high. So I mean, obviously very decent returns could be had on that. I think that's what I'm going to target, and I'm not going to try to play anything through the earnings, because I don't expect them to be very good, and I don't expect their outlook to be strong either. We haven't got another SLOS report since the prior earnings, so obviously we don't really know intrabank credit conditions, but I would imagine that they're still just bad. Didn't you predict a tiny rally on GME a week or so ago? Yeah, I mentioned that it had been illiquid for long enough that it could see a little bit of covering. Um, but I don't think this is. I would have expected to see a little bit more than what we have so far. It's been pretty. It's been pretty gross. No, I'm not going to straddle earnings. Generally, straddles are overpriced going into earnings. They're usually a really bad position, unless you get an extremely outsized move. And market makers are pretty good at pricing earnings. I was way too busy to be following the stream on Thursday, Friday. What changed over those days that's mega bearish? I mean, GDP contracted sharply while quarter one PCE increased substantially, right? And then PCE is continuing to increase. So, we're seeing less growth, more government spending, and in heightened inflation, right? Which is directly indicative in a way that can't be um, brushed off as being stagflationary, right? Rising inflation and lowering growth is very bad. We're not there yet. We're not officially in stagflation. We don't have flat growth with rising inflation, but declining growth into rising inflation is very, very bad. And yeah, USD JPY to 158. That's right, Dave. The Holy Trinity. Which I'll go into more with Dork and everything in a minute. Let me get through all the memes and shit like that. It's hard to make predictions. I mean, it's not that hard. You just need to narrow your scope, right? Because there's so much existential risk. You don't want to focus on anything that's too far into the future, because yes, it would be very hard to make predictions on stuff that's even 30, 60 days out right now. But, over a week or a few days, it's not very hard. I think the market's been pretty well telegraphed for several weeks now. positioning is outsized generally, and so it's really obvious. It's not like we're getting, and it's very uneven, which tends to increase the probability of predictions. Would wide condors be decent earnings play generally? No, they're garbage. GoEV F is pennies in front of a steamroller. GoEV FTDs any good? I don't think we've gotten the latest one yet. Have we? I think we get it on the 30th. It has some ETF FTDs, though those are fairly low. It doesn't have a ton of ETF exposure. Um, but it's been on Reg Show now pretty consistently for uh, several weeks. Let's see. Going into Reg Show. There's some pretty high fail to volume ratios following the reverse split. Things started to normalize around there, and I would say that our next FTD report, which we get in a couple days on GoEV, should show us kind of that post-split environment. But I'll talk about GoEV in a minute. Fubo's been pretty stable ever since its recovery on a drop to 120. Like I said, the last time we were trading in this range before we dropped to 120, there seemed to be plenty of buyers here. We did get a little bout of covering on the drop. It looks like maybe just some shorts got out, although it does remain substantially more illiquid than it was, prior to October. Both of the ETFs are moderately flat. I would say that shorts are pulling back a little bit in preparation for upcoming earnings, which could obviously be pretty impactful, especially if Fubo beats analyst estimates again. Right, that'd be 5 consecutive quarters of beats at this point. I think also there's been a little progress in their case against Disney. I think that's like information over there starting to accelerate a little bit, and so we'll see how that goes. It may be though that even with a good earnings, that the investors wait till till some kind of injunction or decision is made on their current case against the joint venture between Fox and Disney. Anyway, yeah, I mean, earnings obviously present earnings risk, and the price is pretty attractive here, although I'd prefer to buy it under $1. Top recovered a bit this week, but I don't really care about it. It doesn't look very interesting. It's still plenty liquid. Beyond hasn't returned to Reg Show, although it did rally a bit with the push up in IWM. Um, it's possible that this rally the shorting of the top of this rally will be enough to push it back onto Reg Show, at which point I might be a little bit more interested in it. BNAD, haven't heard anything about the 5 cent share offering yet. I know that's still pending approval. It's probably not going to do much until that decision is kind of set in stone, right? But I do expect that most of the share offering will be bought up, especially with the exercise allowances for shareholders of over 10%. That'll probably attract institutions or investment banks. GoEV has just been really stable. It's been on Reg Show throughout the majority of this period. It's shown some intermittent price improvement. There's a pretty huge wall of sold calls at 350, and every time we spike up, they get sold off even harder. So they're really leaning both on the ETFs and on the market maker to get as much liquidity as feasibly possible and keep the price pinned. Now remember, as far as total shares, this has 23x less than it had, just prior to the beginning of March. And yet we're trading at prices significantly higher than we were back then. So there's a lot of upward pressure on short positions that were compounded during this 1 year period, right? Um, where, about almost 2 year period, August. It goes way back, actually. um, it's been having the shit fucking shorted out of it for a long time. But those positions are very much positive right now. However, a lot of the positioning built up from like August of 23 till now is at risk of going underwater. Also, the company itself hasn't been doing too badly. I mean, I don't like them very much as a company. I think they're really bad at making money, but they have been getting more and more contracts. They've been improving production numbers. They've improved output. I think their margins started to bounce back a little bit this last quarter. That may also continue to improve. Debt's been a bit of a problem and will probably continue to be a problem, but it's not as bad as you would think would be, right? It's, their total debt's about 89.99 million on total assets of 542 million. So they could be in a much worse place as a company, right? And the more of those contracts they get for commercial vehicles, the better off they are. And they're trading substantially below book value still. So there is some fundamental bullishness there. I'm not huge on it, but it does exist, right? They just don't make any fucking money. If they start making money, however, especially with earnings coming up, I believe it's on the 13th. This may be wrong. This isn't always accurate, but with earnings coming up, and continued positive revenues for a third quarter, it's possible that it drives some actual fundamental interest in the stock. I think my calls currently cover me through earnings, and that's about it. So we'll see how it goes. Leap's better than short dated calls on GoEV. I don't know. It's been on Reg Show for 27 days without any significant price improvement, right? So they've got a bunch of shit they're going to have to cover anyway. I don't know if I really want Leap exposure. It might be better to have something further out than May, but I only have like 20 contracts on it. I don't care that much about it. If you're really interested in it and you want to build out the bull case a little bit better than I just did, because that was not a defensible position. Then go ahead and do the research and see if it's something you like. I'm not particularly interested. I don't think we're moving into a heightened period of capex. If anything, I think we're probably going to see a fairly significant pullback in the amount of money being spent by corporations. That's really bad for GoEV for at least a couple more years, unless they start to get government subsidies or something, local or state government or federal government contracts for their vehicles. And I don't know if they will. I don't even know if that's really a market they're currently pursuing. Only 54 likes on YouTube. Are you fucking serious? Step it up, guys. What the hell? How many BNED shares do I need to get the 0.05 share offering? I think they just offer it to any current shareholder. I don't know if it's going to scale with the amount of shares you have. That's possible. Right, so it could be like if you have 5,000 shares, they'll offer you up however many shares. But I think it's just an open offer to any shareholder. So I think even if you have one share, or at least that's how they've discussed it so far. I'm not sure if you'll need to be an accredited investor, though. Thoughts on PayPal with earnings pre-market Tuesday? Well, looks like it can rip. Ew. Why? Why are we having this conversation again? PayPal still looks like it fucking sucks. Technically bullish. I mean, I don't know if that means anything. It could just continue to accumulate for years because it's a value trap. Increased competition in the payment space has not been friendly for them, right? Zelle, Venmo, all of these things have been, yeah. Well, I guess they own Venmo, right? What's the other one? Apple Pay. All the new ways of sharing money, and none of them have benefited PayPal. People just transferring each other shit coins, wallet to wallet. I'll call the Moldovan bot farm and have them spin up another 100 bots to like the stream. Thanks, Nitu. It's that kind of dedication that makes you a valued member of the pickle jar and ensures your place in the compound. One share is already out of my price range anyway. Do they accept fractionals? Someone just needs to teach GoEV that you can lie on earnings. Jensen, maybe? I'm doing my part, and we salute you for that. Yeah, I just hate PayPal. I don't really care if it rips on earnings or if it stays flat. What everyone's chasing is this mean reversion, and that just doesn't, like, that's not there anymore, right? Like, the company's not gonna be this again. The competition has changed drastically over the last 2 years for PayPal in almost every element of their business, right? And I think they're still like a usable product, but they're mature and they don't really deserve those multiples. And I think most big investors feel that way about it, right? Especially not in a period where financial conditions are tightening. Now they could do things to step up their game and try to compete with more of the newcomers to the space, but they haven't. It has actually nothing to do with Musk. I just don't. I mean, I don't think they were ever worth, what they were trading at before. I always kind of considered it a value trap. Like they were just throughout this entire period, they were just losing market share, right? And yet trading higher and higher because nobody knew what else to invest in. But now that money's like moved out of financial services, right, into other sectors, and I don't see any reason for it to come back. If you have time, can you explain how TLT can move? And it moves at the 20-year rate. There's a big contradiction between those shorting and those who are long. I'm confused. As someone who's both short and slightly long, I could tell you that they're betting on two possible outcomes. The Fed has two decisions in front of it. They can cut rates or they can raise them. But maintaining the status quo is going to raise rates artificially anyway. So it's better for the Fed to make a decision. I think ultimately short TLT is probably the near to midterm answer because I don't think it'll matter whether they cut or raise. I think the 20 year is going to continue to go up. I think if we cut rates, we're probably going to get a downgrade and or we'll get that final downgrade, right? If not more downgrades. And the yields at the top end of the curve are going to rise regardless. So, I mean, it really is just arguably it's a coin flip, but I think it leans towards the I personally am leaning towards the 20 year continuing to rise. I've been short on it for several weeks now. I think like 5 or 6 weeks now, and I've been perfectly happy with that decision. Can you talk about Kathy Woods calling Tesla the best AI company? I mean, she just says a lot of bullshit. She always has. Musk couldn't even acquire Neva, let alone make his own decent AI. I mean, I don't think it's that hard to just make a chatbot, right? Nvidia gives you all the tools. You just buy H100s, right? And then you're neck and neck with any other company that has a chatbot. I don't think there's anything that really differentiates them, right? Or at least not at a consumer level where nobody's buying anything anyway, so it matters even less. Maybe Musk will be smart enough to do the one thing that no one else has done and just monetize their shitty chatbot, and not promise any improvements or automation off of the back of it, right? We taught our LLM the word peener. I'm pretty sure Kathy Wood has Kuru at this point. I'm short TLT, but I do have some long positions on it for like 2026. I have a large number of calendar spreads that preserve pres- well, I'll be fine if it moves up, but I don't think it will. So I'm also short. Have you ever needed to roll out dead Nvidia straddle legs, or does Nvidia move so much that you've never had to? I've never rolled them out. I just close them usually. Nvidia's been choppy enough lately that I haven't had to let any legs die. Not true. Friday I straddled Nvidia at open, and I guess the short leg died. But who gave a shit, right? It went up like 4%. I mean, once you pass the break even point, it just doesn't matter anymore. Especially if you fly like 10, 15% past the break even point. Um, I think PBR did their ex dividend on Friday. They're doing 40 cents a share. I think that's split over two separate payments in the coming quarter. And then they're reserving the other half of the available funds to pay out into future dividends. Hopefully, at which point things will have calmed down with the board, and Lula will get off his fucking high horse and let them pay the dividends to their foreign investors. And so a little bit of price improvement there on the back of also receiving a nice fat dividend. The BTU, a couple people DM'd me about this. It still just looks stable. I mean, this is still waiting for the Chinese economy to recover a bit. China has started building some new coal plants, which is dope. So it may be that when their economy finally does come back online a little bit, they ramp up their power output and thus their demand for coal. If not, India's starting to increase their coal demand, which is promising because I think probably over the next 10 years, India is going to outpace China and the manufacturing side. It also looks like China's buying into a lot of raw materials lately and increasing their strategic oil reserves, which means they probably expect some international sanctions, or at least they're hedging the potential for international sanctions into the future. They've increased their gold reserves substantially as well. Thoughts on URNM? Hmm. This is the minor one. Eh, that's okay. And it'll probably improve. I'm not. I don't think we're really at the point in the cycle where investing in miners is a good idea, but the speculation has been pretty neck and neck with the increased price of uranium. So you could. I still like SRF better right now though. Would you buy more BTU at these levels? No, no. I really wouldn't buy BTU above 20 or $18. Haven't gotten to the Mag 7 yet. T+1 starts tomorrow. Is tomorrow the first day? Are you sure? April 29th? I thought it was started in May. Oh, May 28th. It starts May 28th, not April. No worries. I'd have been surprised if I was wrong about that, but yeah, it's not. All right, so Apple. Let's start with the Mag 7. See if we can run through these pretty quick. Apple's delta is staying pretty low. A bunch of gamma fell off Friday, which is pushing it a little bit back towards negative. And maybe starting to cycle down again. This could be yet another good opportunity to sell covered calls or sell vol on Apple, or just sell calls depending on how much money you have. Above that like 172.50 strike. I've been selling those like 30 DTE roughly. It's been a great little earner. I don't really have any problem with it. I don't think earnings are going to impact anything substantially, but it is going to be a risk, right? And so you may want to wait till after earnings before targeting those short calls. But from an options chain perspective, it looks really very much like it's just going to continue to grind flat to down, right? Which has been, I think we first started discussing selling these on Apple back here in Feb, and it's just been consistently profitable ever since. As long as you were selling with a decent amount of theta, so I think that's going to continue. But I would watch out for earnings. They're this Thursday, so yeah, be careful of that. Cat's okay. Cat's not part of the Mag 7, and it's not something I generally review on stream. If I see some opportunity in Cat, which I would have mentioned, I'll bring it up. But currently, I'm not all that interested in it. Hmm. I don't know. I'll look at the options chain tonight. If there's something good there, I'll write it up. But I'll take a look. But not right now. I haven't. I don't want to dig into that right now. I don't have a lot of time. AMD. So this was like a 0 DTE play Friday, to catch the bounce. It looked pretty bullish into that. Semis have been leading AMD quite a bit, so it has some room to play some catch up. Uh, it still looks pretty good after Friday's expiry. I think Delta's still a little bit negative, but Gamma's holding positive. Some of the short put positioning is shedding, so buy side might get a little bit exhausted soon. But I think 65 is still a pretty reasonable PT. 164, I guess. 165, like right there. 165.06 is still a pretty reasonable PT for the remaining leg of this run, before it finds a little bit of stability. Obviously, if Nvidia fails or markets are trending down, or indexes are falling, I would be careful entering positions on it, but it looks pretty stable. It's got still a little bit more upside room. Amazon recovered, I think, fully from its breakdown off of its trend. It's got, hold on one second. There it is. It's still got about 327 billion in Delta, which is skewed a little negatively. But Gamma's pretty positive. Some of the short vol is starting to pull back on it a little bit, and it had positive charm in the end of last week, so tomorrow it might have some weakness, but it looks like it's pretty primed to continue back up. Especially if more call buying comes in the early part of this week. I would be looking out towards not that trend so much. Maybe a break to the upside of 182. Yeah. If it broke to the upside of 182, that might be a decent long. Otherwise short vol actually looks kind of attractive on this one because the short puts, like bear put spreads, looks pretty attractive on this because there's just a lot of stability, like protecting any kind of downside move. Right now, I think charm is just a little positive on the chain, and so that's that's going to add to the upward impetus. And gamma neutral and delta neutral are still very far out of the money. Upward impulse. So yeah, this, I don't know if I'd want to go long just because resistance is so close, but maybe something like selling puts would be pretty decent. I'm not gonna fuck with Google this week at all. It's too much bullshit from its earnings. Obviously, the spike on earnings was ridiculous. Some of that fell off, but not much, and Delta's been picking up. It is at Gamma Max, so one could argue that there's an opportunity to sell calls to the upside, but you'd want enough theta to capture them, or to capture the profitability on them. So that might be worth staying away from, or at least until you start to see volatility fall substantially. Maybe if it sort of trades flat for a little while with vol falling off, it might be better to sell calls against. I don't think I'd want to buy puts on it just yet. Meta's recovery has been kind of lackluster, and their earnings were obviously not good. Everyone was expecting Zuck to keep to his promise of not blowing shareholder money. That was a lie. Delta didn't really improve. There's a bit of positive gamma. It did bounce off gamma neutral on Thursday. But didn't really bounce substantially away from it on Friday, right? Like Friday returns were pretty bad. I think short vol is continuing to pull back here. and we're not really picking up enough long call interest for it to fill that upside gap just yet. Although, again, with this one, I would be very careful because it's not as influenced by its options chain, and it has a tendency to run really hard on very stupid news. If it does fall back below 400, where gamma neutral is, 405, that would be quite bearish. But I don't think that's going to happen anytime soon. This might be something that's worth just being flat on, like maybe like a condor or something like that as it gets hung up in this like 440, 450 range. Although I'm not a big fan of condors on individual equities because you have that pin risk you always have to worry about, especially when they're short dated. Microsoft kind of just mean reverted after its earnings. Another one that's not super influenced by its options chain. But Delta's improved slightly. Gamma's up a little bit. I would say the environment it's in right now is at least very supportive. It's unlikely to fall substantially further from this play spot unless indexes fall into the beginning of this week, which is possible. But without the bleed from indexes, its options chain looks pretty basic. Not a lot happening there. Netflix really hasn't improved since it fell off with earnings. It's been a little choppy, but I think the chain still looks pretty bearish. Delta continued to fall off into the end of last week. Gamma was falling off as well. It looks like short put positions have been closing up. There is a little bit of supportive call positioning, and Delta neutral's at 537.40, and it's still trading just shy of gamma neutral at 564. So I guess I'd be a little bit more bullish on it on a break to the upside of 564, but I would be kind of cautious that wouldn't just be used to close out more of the short put positioning. And then if it actually fell below delta neutral, that would be quite bearish. It does technically look like it's forming kind of another shoulder here. On the back of this distribution, right? And then that may lead to more downside in the future, but it could be kind of choppy until that happens. I don't really have a PT for UGI. I was just going to hold it for a few years. Its historic growth rate is in excess of the S&P 500. It was growing at a CAGR of like between like 8 and 12% a year for the last like 7 years. I think its forward growth rate's about probably, well, it's projected to be about 8-9%. So I don't really have any reason to sell it. And the dividend's good. I think nat gas prices are extremely low. So Nvidia we talked about a little bit going into Friday, and that it looked super fucking bullish if indexes broke up. That was realized pretty quickly. We tested 890, I believe, just shy of 890 on Friday. The options chain here is pretty supportive. It's back above gamma neutral, which I kind of left in the dust at the 778, which I think was actually pretty close to the low for the day. The low for the prior day. Yeah. It bounced off of gamma neutral in the prior session. And then gamma max here, which hasn't mattered much in the past on Nvidia, is at about 945. And especially with earnings coming up and they're projected to beat, I wouldn't be surprised if we see a pretty strong bullish push on Nvidia going into those earnings. I know we did last time, right? We saw like a pretty decent amount of price improvement, and then it failed right before earnings, and then with earnings it spiked super hard again. So that's something I would look at. Let's see. Oh, Tesla's the last one. So Tesla spun up a shitload of interest right after earnings last week. None of that has gone anywhere because they simply haven't been able to get the price substantially over GN and DN. I think Friday we closed just above them. 168. Yeah, gamma neutrals at 167. However, charm was still negative going into the end of the day. A decent amount of the call interest for last week was weekly, so a bunch of that fell off. However, some of it still remains, and we'll see if Delta picks up going into the beginning of this week. If Tesla does break loose of like 170, 170, 250, it could run pretty hard. I think there's, short call positioning to the upside from about 175 to 200 that it could pretty easily squeeze out, and it's gotten pretty illiquid as well. So I think there's probably enough momentum to pull it off if it is able to get above and stay above GN. We still CCs on your UGI pretty rarely. Sometimes going to earnings, you get a little bit more liquidity, but not much. All right. Someone's at my door, so I gotta answer that. I'm gonna hop in the room with these two nerds. Hey guys.
So
We're talking. Yeah.
I put it in my butt anyways.
Give me 1 second.
So.
I'll be right back. You guys can just chit chat.
Well, Jfresh just left, so I'm going to continue this phone conversation with my mom. So yeah, anyways, I put it in my butt. And as soon as I did that, they went ahead and gave me the refund on the purchase. And the guy got to keep it anyways. So yeah, anyways, I'm about to go talk in front of all these losers. So I'll call you later. Okay, Mom? Love you. Bye. Click.
What was that?
Oh, well, Girk said we could chat while he goes and deals with something. So I went ahead and talked about putting things in my butt in front of a bunch of people, I'm pretty sure.
Oh, I got cut off somehow when I got reconnected.
Well, that's good.
So are we live or what?
Yeah, it's just us. Girk's not here. We got no moderator.
I mean, I'm actually just back.
Oh, God damn it.
Yeah. Nice try though. How you guys doing?
Oh,
pretty good. Right. We're just hanging out. I'm messing around with some data stuff. It's all right.
Dork was complaining that weeds grow, and that now that he owns, he has to take care of them himself. You could always just pay someone to do it. And before you know it, you're spending like $900 a month on all these different services to do all the shit you don't want to do.
Yeah, how about instead I just get a pair of gloves and go out and do it?
Gross. That's how I know you're still poor.
Like a peasant?
Yeah, like a peasant. Well, of course, I'm going to mulch them too and turn them into fertilizer from the garden so I could save money on produce.
Oh my God, you're so poor.
All right, Dork, this is what you need to do. You need to get a renter in there. You need to put yard care in as part of their lease, and then you can take their rent and go rent your old apartment back.
Oh, you know what, Girk? How about this? How about I erected this yurt in my backyard? How about you give me first and last month's rent, and you start paying, and then I'll do all the yard care you want.
I don't want to live in a yurt, man. That's like a floorboard. It's gonna be echoey. It's gonna be really hard to record things.
I'll help you out with that a little bit. Okay, we can put up some like some straw around the walls to help with the echo.
Have you thought about proposing this to like build the yurt, right? But just rent it out as like a nightclub for fathers in your neighborhood.
Ooh.
Like put in some beer taps, some games, right? And they could be like, "Oh, honey, I'm going for a jog," right? But instead, they're just drinking and hanging out in your yurt.
You see, I think there's
and they get to be away from their children.
It'd be much easier for you to just rent out the yurt to somebody.
Mm.
And you
I
could
mean,
just
if I
call it
rent the yurt, that's what I'm doing with it.
you could just call it a country club to get around zoning rules
Mm-hmm.
Ooh.
and charge joining fees, right? So
Dude, like a gentleman's club. I'll call it a gentleman's club.
yeah. So you don't like sell anything there. You just sell a membership, and only people who are members. And I think you probably have to be like only people in your neighborhood. Then you would not have to worry about any zoning laws or anything like that.
Throw in
That'd be
some
kinda cool.
casino games, and then give them a credit, and that's how much they get to gamble every month. But make sure that the memberships are reflective dollar to dollar for that credit.
I was just gonna like use the membership. Like one membership will basically pay for like a monthly membership fee will pay for like a keg of beer. So if I just get 2 people in my gentleman's club, then I got beer covered.
Yeah, but you got to pay for like electricity and all that other stuff, maintenance. You got to pay for wear and tear on all the furniture.
It's a yurt. It's not gonna have furniture. It's gonna have like pillows.
Well, yeah, but that's even worse. They're going to be full of farts in like 1 month.
And then just open the yurt door and air it out.
I don't think that's how farts work. I think there's solids that will build over time.
That's terrible.
Okay, yeah. I'll just hose bleach all over the entire place.
I like this.
Instead
like
of
McDonald's.
pillows, pool toys.
There we go.
There you go. Yeah, like the inflatable furniture from the 90s.
Mm-hmm. No permeable surfaces. Then all you have to do is just go inside with like one of those, like one of those spray things that you pump. And it's got the little wand, like pest control guys have.
Yeah.
And you just douse the inside with disinfectant once a month.
This can't possibly go tits up. I think I'm gonna do it.
I think it's a great idea.
Yeah. So we were all pretty wrong last week.
Were we? Oh, yeah, I guess so, huh?
Wait, did I win?
I think I won.
Hmm.
You were $1 above me? I thought you were below me.
Hold on. J-Fresh won.
J-Fresh is $1 above? Damn it.
You know what really pisses me off? That other guy literally nailed the closing price to the 30 cents.
Oh, Bulgurk?
Only
Yeah.
counted.
Yeah.
What a piece of shit.
Last week was weird.
No, it wasn't.
It was kind of weird.
It was really anticlimactic. I mean, the people who were in the hole on the way down pushed us all the way, halfway back up. And they look like they're pretty much perfectly positioned to finish the job in the next 2 days before the interest rate meeting.
Yeah.
Do they want to push it any higher? Because, I think that would come with some actual buying of calls out of the money. And they seem to not want to do that.
There's calls out of the money up to 52.50.
I will pay you to tell J-Fresh he loses. J-Fresh, you lost.
I'll pay you more to... I'm not going to pay you anything. I'll just don't care.
Well, if J-Fresh loses by capitalism, then I win.
Anyway, as I was saying, there are some calls. So calls fell off above 52.50, but there's a little pocket of calls from like spot to 52.50. And then there's on the weekly chain, there's like a huge amount of concentration in like the 5100 to 5200 ish range, expiring on Tuesday.
Huh.
So it just seems like perfectly ripe for them to just do exactly what they've been doing every day: sell vol, pump 0 DTE calls, and just drag this baby up so that they can close those puts. Because they've been closing puts all the way up to 5,300, like pretty consistently all week.
Yeah, I've seen them shedding the short vol positioning since like Wednesday.
So they're trying to get out. I think they're just going to keep pushing and finish the job. So, and then the interest rate decision, we all know it's going to be flat. That's not going to surprise anyone. So then it just comes down to like what J Powell says, which is probably just going to be some absolute mess that nobody can really understand, and everybody will just interpret how they want.
Mm-hmm.
So otherwise, I mean, back up to like 5,200 range, and then just a lot of violent chop, and who knows? I think once they get up there, I think they'll probably run out of ammunition, and they'll just switch to trying to contain vol to try to like keep it from getting out of control again. And that's going to be the story. And everyone's going to be like, well, another week of pump up to flat to violent chop. And yeah. Welcome to the casino. You lose.
So, I'm looking at change in OI. And it looks like all the calls above 51.25 have been just dropping off all week. And the only calls that were added over the last 5 days to the upside of 5100 were 51.15, 20, 25, and 51.75. Here, I'll show you.
Yeah, you can show. We're going to 5,200. They're going to try to close all that stuff in short fall. And
How much more exposure do they have at 5,200, or they just need to close 5,100?
I think 5,200 is big enough, especially on like the Tuesday expiry, that it's worth pushing to try to get it.
Yeah, here, let me share this. There, I put it in chat too, so you don't have to wait for it to load up on the stream. But this is the 5-day change in OI. See how it's just like dead to the upside of 5,100? So this is just old shit that they're going to rescue? Because I see the gamma exposure, right? At like, well, it's really low up to 51.
Is this Delta? Is this Delta?
This is OI.
Just OI?
Just OI.
For which contracts?
All.
SPX and FPX over
Yeah,
here?
it's aggregated.
Yeah, I was just looking at the weekly contracts because that tends to be what people mess with in the short term, especially with all the 0 DTs and stuff. And you can see that like rolling position, that exponentially decaying position in time that they just continuously roll.
Yeah.
So there's stuff that goes up to like 50, almost 5,200 from what I was looking at. I posted stuff on Twitter, but it doesn't matter.
Oh, I didn't get to see
We're going
that.
up.
Yeah, I somewhat agree. Although I'm not entirely sure where.
Yeah, it's going to be a fight, right? Because
Yeah, because they've already sold so much. They've already sold so many puts, and we really didn't get anywhere, right? Like I think we still ended the week just below delta neutral.
Yeah, well, I think what they're trying to do is roll their puts down,
like further out of the money.
Like, so it's like it's not like a it's not like a discrete thing where they're just like, we're gonna get the price up here with calls and then drop all of our puts. They're just redistributing They're redistributing their sold puts lower as they're trying to push the price higher to prevent having to take a big loss on the puts that they're rolling down.
I saw some
At least
pretty
that's
big
what it looks like
moves
to
at
me.
like the 5,000 strike, and then like 4,800, 4,700. So yeah, I could see that. Although that
Yeah, and then
seems
if the
really fucking risky.
then if the market goes in their direction, they can just slowly roll. They can just slowly as they're rolling their puts, just start rolling them back up like they were before.
Yeah.
Until the next time they get blown up, right? And then, so I think unless we get some sort of event, they're just going to push it right back up.
We'll see.
I mean, you look at
the yen into Friday afternoon got really crazy.
yeah, it was up to what 158.30 at close. It was like a 3 sigma event that day. But
Yeah.
I mean, that's great for them, right? As long as it's going in that direction, they're fine, right?
Well, no, because if it continues this, if you look at the daily candle on yen, it looks fucking ridiculous. But if it continues like this, then the Bank of Japan's going to start selling treasuries to stabilize their currency, and that's going to tighten financial conditions.
I think Bank of Japan selling treasuries is like an absolute last resort.
Yeah, I mean, until they do, they're sitting in a great position.
It's not a last resort. The last resort is raising interest rates. It's clear that that's their intention.
They
They're going to
can't raise interest rates.
I know.
They have like 260% debt to GDP.
That's why they're going to sell U.S. Treasuries to stabilize the yen over raising interest rates.
Why don't they just use their cash reserves first? Like the Ministry of Finance still has like 200 and something billion, 280 billion in cash reserves specifically for that purpose.
So stabilizing the yen, right? That doesn't mean make it stop going down, right? That means get it back to a price that makes sense. So in this thing where if we talk about primes and having their, dollar collateral, backstopped by yen, the only way to keep the dollar collateral growth is by having yen go down. So when yen doesn't go down or it stops going down, right, your dollar collateral flatlines at best, right?
Yeah.
So there's a risk there to this giant leverage machine where if yen just continues to collapse, like let's just say that the liquidity on yen is running kind of low, right? That may or may not be happening, and if that's what's happening, then there will be some sort of intervention by the Bank of Japan.
Why?
Why?
Not a single person in charge of any monetary lever on the planet is willing to do anything until and unless something blows up.
Well, something will blow up if that's the case.
What's going to blow up?
Japanese lenders.
I mean, they'll margin call before that happens.
Yeah, well, shit's going to start breaking, right?
What's going to break though?
Counterparty risk.
Everybody's levered to be short yen, long USD, including like all the people in Japan.
Not the normal people. Those guys just live on fucking yen and spend in yen.
Dude, like every housewife in Japan is trading their currency pair.
No, I mean, but they buy foreign assets, right?
Yeah, they do.
And they put their money in funds that buy foreign assets for them. So you don't have to be like a rocket surgeon. So yeah, I don't know. I guess I'm not convinced. I think Japan is perfectly willing to be as spineless as every other central, planning agency, and just not do anything until something breaks.
So I expected the Bank of Japan not to make a decision because their inflation's falling back again, right? And they're not really in a position to make one until the U.S. makes a decision. Like they can't hike unless the U.S. does, basically. But since everyone's using the leverage from the carry trade to increase their short vol like margin. We're really rapidly running into a scenario where like they're starting to hit those like maximum leverage ratios, right? And there's no more to squeeze out of it. It's a fucking turnip at this point. Like we're kind of at the limit. We're kind of at the limit of how much they can lever the carry trade, and we've gotten there very, very quickly.
Like, think about this, Jay Fresh. Think about how much assets under management BlackRock has versus the Bank of Japan.
Okay.
Think about it that way, okay? And that's just BlackRock. Now add JPM, add what's it called? Fucking Goldman Sachs. Add those pieces up. Yeah, add Blackstone or whatever. Yeah, add all those fuckers together. And what do you have in terms of total treasury holdings, in collateralized obligations compared to the Bank of Japan? It's, we're reaching a point, right? This is why yen is kind of dropping so precipitously in my mind, is that we are reaching that limit, but that limit is not well defined, right? It is a leverage ratio between the Bank of Japan, or I guess just, the lenders in Japan and the lenders in the US, the primes in the US, right? And as we reach that limit, what's going to happen is that there's going to be no more yen to borrow, essentially. Not like you run out of yen necessarily, but the ability to create yen is outweighed by the demand to short that yen.
Well, let's put it in more macro terms without trying to get JFresh wrapped up in FX markets, and just say the velocity of yen would drop precipitously.
In the Japanese market.
Yeah.
Alright.
And it's starting to already, right? Like post interest rate decision, we've already seen we're gonna see that get worse, right? Which could theoretically, in very short order, throw them back into a deflationary spiral. At which point, the yen will be dropping at a rate so fast that it would be unable to recover without significant central bank intervention. And like Bank of Japan already reached out to like the US Treasury and the Fed and the IMF over the last couple of weeks on like how to manage this situation, because they're going to have to do some management, right? Or they're going to cause or they're going to be the cause of a financial crisis.
Yeah, it'll be fun. It's not going to happen this week.
It could happen very fast.
Sure.
Yeah, ideally for Bank of Japan, the Fed raises rates, right? And then they can counter immediately with a rate increase of their own and push the yen up.
How would that push the yen up if it keeps the spreads the same?
Because their spread is, well, their rate increases are leveraged, right? So they're cut because of all the dollar collateral packed into the leverage trade. Their rate cut, say 25 BPS, right, would be the equivalent of the Fed cutting rates like 2%.
All right. Well, we'll see.
Yeah, I mean, we'll see.
I will say, watching the USD JPY this week was often more exciting than watching the market, where all of the moves are still mostly in after hours.
But remember that all of that short vol is possible at these levels where it's still, the positioning is still largely underwater because of the margin offered by the carry trade, right? Because U.S. yields were slipping all week. And those ended the week quite a bit higher than where we started the week, right?
Oh, yeah. Yeah, the 10-year hit 4.7 on was it Thursday? It dipped a little bit.
Yeah, the 2 year is at 5% now.
What are you doing?
So the bond market does not believe that the Fed is cutting.
Yeah. Well, why would they? That's a ridiculous notion.
But somebody's got to step in and ease the pressure on the trade some way or another, right? Either they have to force the trade to de-risk, or they need to widen the spread. And the Bank of Japan definitely isn't clawing back their one positive interest rate increase of basically zero. Their move to zero. Like, they're not going to claw that back. So it's up to the Fed. And then, I mean, at some point in this, the ECB either needs to agree not to cut rates, or they're going to have to raise rates also. And them in England, like Britain, their inflation's, they've had an extended period of economic contraction, right? So their inflation is actually naturally falling, and they're way ahead of the Fed on the curve for rate cuts, right? And so, I mean, we could see EU and Bank of England cut, like ECB and Bank of England cut before the end of the year, maybe twice, which is only going to further widen the spread, right, between between the main like the biggest central banks, and that's gonna push the dollar even higher.
Yeah. I agree.
We're
I
in a
don't know.
tricky spot.
It's kind of frustrating at this point because you kind of see all this stuff, and once you realize like how full of cowardice they all are, and how much they're trying to like gain everything instead of just acknowledging what the situation is and dealing with it. It's just exhausting, and it's like watching paint dry, watching them flop around, trying to delay absolutely everything.
Well, it's a bunch of limp-wristed regulators combined with a bunch of hyper greedy, squirrel-brained fund managers, right?
Yeah, yeah.
I love the dynamic. I think it's endlessly fascinating.
Yeah, I mean, it is fascinating, but it also just kind of gets excruciating at some points.
Well, I mean, I think you just need to change your expectation of central banks acting in the interest of the public, and assume that central banks are going to act in the interest of banks. And
yeah,
then it all becomes a lot more exciting.
Well, see, the thing is, the part that gets frustrating for me is that, generally the outcomes of this kind of situation is human suffering.
Yeah.
Like, why do we have the privilege of suffering a recession because of a small consortium of extremely greedy people stepping on the neck of another even smaller group of people who are too scared to do anything about it?
My kingdom. Because the system wasn't designed for you, right?
Yeah, I mean, that's the game, right?
I think it's pretty clear that, pretty much in the history of society, the system is built for the elite few who are like really into the war games and the political games, and then everybody else is just fodder for the game, right? It's no different than any other point in history. We just have the illusion that we matter, but we're all too stupid and unorganized to actually matter, even though in theory we do.
For me, it's like I understand the path that central banks need to take in order to ease the suffering of people, right? And I find the most interesting thing watching their own foibles and fuck ups backfire on them as they dig themselves deeper and deeper into a hole, where to a point where they are actually forced to act in the interest of the general public. And I think when that break point happens, that's just the best, right? Like when central banks have to fuck the rich, that's exciting, and we're getting really close to it, and it's awesome.
Who are you? Wait, you're rich.
I'm not that rich though. Like, I'm not rich enough that like I would be wildly affected by central banks fucking rich people. And I don't hold stocks long enough to care about Biden's stupid tax.
Gut reaction when the guillotines come out. Are you in line for that or no?
I don't think so. I live
Alright.
below my means. I mean, as long as I've gotten rid of the house. And I wear clothes from Costco, so it's like no one's gonna like be like that guy, you know?
I bought some shorts from Costco the other day.
Yeah, were
They're
they
nice.
sweat shorts? That's my new thing.
No, they didn't have any sweatshorts at mine.
Uh,
They don't have much for men there actually. It's like 80% women. Is that how it is at every Costco?
I assume.
It's like 80% women stuff, and then there's like 5 tables with just like a bunch of the most boring, bland men stuff you could possibly get. And so I grabbed a couple things.
I think the biggest epiphany of getting a Costco membership for me was I finally found out where all my teachers in middle school shopped. Sweatshorts at the jam? See, Derek C knows what's up.
Yeah, I have sweatshirt. I have some pairs
Who are
of
the kids in the
sweatshorts.
background? Can they be muted? They're JFresh's spawn, and no, but if you do invent a way to mute children, I'll market
Let me
it.
know.
Yeah.
Yeah, I'll buy it. I'll be your
Everyone
first
will
customer.
buy it.
Yeah, I'm outside of my pool. When I have
Nice.
these long conversations on the weekend, my wife tends to get angry at me because I usually do it in my office, which means that I'm ignoring the kids and that she has to deal with them. So I figured if I throw them all out in the pool and stand here with them,
But you're
and
not in the pool too?
I mean, I was. I got
Oh,
out to
okay.
do this. I was in the hot tub earlier, but it's a little too warm for that. So
Wait, should I be mowing my lawn while I'm on this meeting?
yeah,
Super glue on the lips. That's some serial killer shit, man.
Yeah, no, there's something
oh,
better. It's called Prozac.
you want to know how great kids are? Yesterday, so I already used all of my capital to avoid the children. Yesterday, found about 30 minutes to play on my Nintendo Switch.
Ooh,
So I just
nice.
wanted to play a game, but I had to kick my son off of it because he's always on it. I'm like, you can't spend all this time on it. It's my video game system. I'm the head of the household. I'm not going to negotiate with my child when you use it way more than I do. I want to play it. I'm going to play it. Well, that made him upset. So then he went downstairs. And one thing leads to another. And before you know it, all the children are upset, including the 4-year-old who decides to take his anger out by pushing one of our wooden chairs by the counter height chairs over, smashing the back of the wooden chair off of it.
Oh, nice.
I got in a lot of trouble for avoiding that. And it was only 30 minutes. I had hardly played at all. And I was like, this sucks. I already got in trouble. And I didn't even get more than 30 minutes.
I mean, what it sounds like is you should have just bent over and given up the Switch or bought another one.
Yeah, just buy
Yeah.
another, dude. Like, then you can play with your kid.
Yeah, the GameStop shareholders really need your patronage.
I probably wouldn't buy it from GameStop.
Who would?
Yeah, I mean, if I buy it from Amazon, I get it in like a day or two, and I have a record of when I bought it in case something goes wrong.
And if you really want to exact your vengeance, this is what you do: buy yourself whatever like the upgraded version of the one you have is.
Oh yeah, give him the
right?
old one.
And then be like, "This is yours now," but it's the old one.
Yeah, that's what we
Yeah.
do with everything. We give our
Yeah.
kids the old shit, take the new shit. Yeah, raising kids is awesome.
I love this whole like doing like petty vengeances on your children rather than trying to create wholesome and uplifting outcomes from this whole thing, like being able to switch and relate with your kids.
Now, after like the 15th time that my son has gotten angry at a video game and thrown one of my Switch controllers at a wall and broken one of the buttons, then thus rendering the entire controller useless, they don't deserve. They're animals, and they should be treated as such.
You should do if you break something. My parents, if I broke something, they'd be like, "Well, it's broken now. Have fun.
Listen,
have fun earning the money to replace."
Those kids are inheriting the economic debt of our lack of participation in government and laziness. So Have some sympathy, all right? I'd be angry too.
They're not old enough to understand any of that.
They
They
can
can be
sense
angry
it,
later.
like Dork with the rocks
Maybe.
in his butt.
Those aren't rocks, okay?
Sorry, crystals.
They're fancy rocks, okay? All
I
they're
must have missed this.
Oh,
okay?
Dork's been popping crystals in his booty hole for like a week now, trying to get the
For
market
what
to
purpose?
crash.
Oh, weird.
Yeah,
One of them might have
Don't do
been a
that.
giant polycrystal. I'm still not sure.
he's been very
Don't-
touchy lately. Like he always wants to hug it out. And
Yeah, I cracked my
Yeah.
knuckles and I couldn't stop rolling on the floor talking about how
So
awesome.
now I know why the market went straight up all week.
yeah,
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 It
he
didn't-
over aligned his chakras.
Yeah, why didn't you tell us you were putting things in your butt?
He
Well, can
did.
someone
It was the
tell-
first thing he said at the beginning of the meeting last week.
yeah.
I didn't
So
know
can
Dork
someone,
was a crystal girl. Haven't you seen the gifs?
dude? Yeah,
What
I'm
the
like as granola as they come. Can someone riddle to me why Google went up 1,000% on Friday?
Do what?
Why did Google go up 1,000%?
Oh,
Dividend.
20-cent dividend, man.
It was the dividend.
No. It was just
Yeah, I mean,
bullshit.
they also had good earnings. I mean, relatively.
They
They
just
seemed
had
alright,
less
but
capital infusion than the rest of the Mag 7, so they were the easiest target.
it's like yeah, their earnings was like all right, but I'm like 10% is a little excessive for what I saw.
It's just dispersion, right? It's just like you pump the money for the dispersion trade and the asset that's least leveraged because you can leverage it the most. That's why I think Tesla's gonna run.
I think you're right. I mean,
Because it's in
Tesla.
It's already
384 ETFs, and you just need to pump the fuck out of it and get it spun back up, and there it goes.
Yeah. I'm definitely not touching it yet.
Nvidia's
I do
in like
kinda want to
480 ETFs, now it's ridiculous. You just got to turn the pedals, right, Dork?
That's true. Yeah,
If
no,
you can
I
get a
always
full
forget.
rotation of the pedals, you can
Well,
start the rocket ship.
I always forget the main tenet of the market, which is when a tiny little stock that is, makes no sense to be worth more than it is, goes up a lot and gets included in a lot of ETFs and gets a lot of volatility. That's bad. That's market manipulation. It's terrible for the markets and a fundamental risk. But when it happens with gigantic companies that a lot of fund managers are excited about, it's all of a sudden totally normal, natural process in the market, and it presents no risk to investors.
Yeah, exactly.
Yeah. Yeah.
It's like
Yeah, I've been
look
saying
look
for
at
like
the
3
risk.
months now.
Look at the risk to the pension funds, right? When retail's excited about a stock, and how could you guys destroy these teachers' livelihoods and retirements? And then when it's Nvidia, sell puts, buy calls to the moon.
Yeah. I mean, I've been saying over and over and over again, where's the SEC and their meme stonk public service announcement?
About the Mag 7.
Yeah. Nowhere to be found. Right?
No,
There's
no.
there's
You
literally
know what?
no
Gary
difference.
Gensler may have just given up on making videos. Like, he just had his school of stock moment at the same time I did.
Give him a break. He's only been on the job for like 148 weeks.
It's true. That's true. We still
Give
get
him
used
some
to
time.
Well, yeah, I mean, he's got to get his porn database fully filled out before he can actually start doing stuff.
Before they
it. I, for
ban
one,
it in
blame
his
the
state.
staff.
I mean, you can blame a lot of people.
It's really, there's no blame to be placed. It's just structurally how it's like allowed to happen. I mean, really, if anybody's to be blamed, it's like the OCC, right?
Or Congress, or all of them.
When Dave Lowry interview, you know, what I've realized about Dave is that Dave likes to spend his time talking with people that have little to no knowledge about anything. And that seems to be like the easy mode situation that he prefers for his public dissertations. I don't
Yeah,
think
I
he
forgot all
wants. I
about
don't
him.
think he wants to be asked any hard questions. He's never wanted to be asked any hard questions because we tried to bring him on back before anybody knew, like back when he was still unimportant, right? Well, he still is unimportant, but he was less important, and he was entertaining the idea. And then I think he watched like 15 minutes of some other interview and was like, nope, not doing that.
Well, why would we get Dave Lauer on when we could get someone amazing like Ken Griffin on? I'd much rather have Ken Griffin here.
Ken
I
Griffin
wouldn't.
wouldn't
He's
give
not.
us the time of day.
And even if he showed up, he wouldn't say anything of any value. He'd just give us his talking points. I don't have time for that.
What you want to
Okay,
do is you want to get drunk with Ken Griffin
Yeah, and
at like
record
a
it.
Citadel corporate retreat in the Bahamas.
what about
Yeah.
what about what's his face, the former Fed president? Can we get him on?
Which one?
The dude before
Bernanke?
Bernanke?
Greenspan?
Yeah.
Isn't he
Wait,
dead?
were you even?
No, wait, no, the one dude who fucking he kind of talks like this, and
Does he have a Nobel Prize or not?
What?
Does he have a Nobel Prize or not?
Larry
If he doesn't have a
Summers?
Nobel Prize, I'm not giving him the time of day.
Okay, let's get Bernanke on then. How about that? Can we get him on?
Probably. I mean, we just got to pay his speaking fee.
What's that, like 500 grand? I think we could scrounge that up.
Probably, yeah.
Yeah, you gotta give.
Alex Jones.
You know, it would be fun. It would be fun to get someone like from a different. What about one of those like YouTubers who does like news? You get one of them on and just tell them just how fucked up everything is. They would love that.
I don't want to give them their flashy video cards for the next month. Where
Yeah, I hate all
then they'll have
this.
like bombs going off in the background and shocked Pikachu faces.
Yeah, or like, what about Heresy, whatever it's called? That dude, he made a video on what we've been talking about for months the other week.
This is what we need to do. We need to target pod shop guys because no one wants to talk to them, right? Like CNBC won't bring them on. They don't have enough followers, and they just get shit on by their bosses all day. And we just need to leverage their angst to get them to leak important information.
What about Jim Bianco? He seems like that kind of person, but he does manage to get on TV sometimes.
He's too into crypto.
Is he?
I don't want to talk to crypto people. They're dirty.
He's got a weird obsession with crypto. Like he tracks all of the net flows into all of the Bitcoin ETFs, and he goes to crypto conferences.
What about that one dude from Bloomberg, or no, from CNBC with the two different colored eyes? Could we get him on?
Who are you talking about?
Only if we
like
spend
that
the entire time talking about his eyes. Hold on. He must be a market prophet. The prophets all have fucked up eyeballs.
Because they can't see.
Sydney Sweeney, Tom Lee.
Sydney Sweeney?
Or whatever her name is. The one with the boobs.
Well, how is she a market?
She has a fucked up eye.
Does she?
Yeah, she's got like a lazy, like a soft, well, it's not lazy, but it's like soft. Like a soft eyeball. Yeah, she doesn't know it yet.
Yes.
But if she opens a hedge fund, she's going to make 200% on her assets under management in the first year. Michael Burry, one eye.
Yeah.
Peter Lynch had something fucked up with his eye. So did who else had one eye? The dead guy from Berkshire.
So yeah, Charlie Munger.
The story there that
Munger had one eye.
So is the moral of the story there that your performance will just naturally go up if you can't look at any charts?
It's the depth perception. Once you remove depth perception from your skill set, you immediately become a market prophet.
Wait, so Girk, when are you putting a screwdriver to one of your eyes?
Already did it.
Oh shit.
Yeah. A couple of years ago.
Gross.
It's been great. Just a soft scratch on the cornea. I didn't want my eye to look weird in pictures, you know? Some of them take it too far. Like, I think Tom Lee just stuck a tens machine to the side of his face. And just short-circuited whatever was going on there.
I think he looked into a particle collider, is what he did.
Is there anything else to talk about for the market? Is it really that boring?
No, there's tons of shit to talk about. You just don't want to because you want to live in your world where the central banks do nothing. And even though it's accurate, it's really boring. So we could have said all kinds of bearish shit today.
I'm gonna be honest.
Me and Dork are still trying to figure out how to analyze the correlation between leverage on the JPY carry trade and short vol, but I'm convinced that it's statistically relevant.
I'm gonna be honest. This might be the worst weekend stream we've ever done together so far. We gotta spice it. We gotta spice it up.
Oh shit! I can try to find some charts. Or it's the best weekend stream we've ever done.
What's your user count at?
228 and rising. 238.
All right.
People are piling in. They love this.
Usually we're like 270 by now.
Oh, dude, we haven't been at 270 in weeks. We keep saying bearish shit when the market's going up. It makes people upset.
Yeah.
Now the market's going up and we're not saying bearish shit. They're really the few people that do still watch aren't going to be interested in that.
Yeah, so we figured it out. We trapped all the bears, and now we're just gonna pull the rug on them too, and then there'll be no one left except for us.
That's the plan.
Perfect.
It's perfect.
Yeah. Seriously though, I think you're wrong. I'll start off here. Let's make it exciting and create some tension. I think you're completely wrong. I think there's no out of money positioning. I don't know what chart you're looking at, but I mean, leverage is up, but they're not buying any calls. And I think we get stuck between like 100 and 125 for the next like 2 days. And then maybe the Fed's hawkish, but they probably won't be. Probably just be a big cuck again and do nothing.
You see,
but then something blows up, right? If the Fed does nothing again, the fucking yen is gonna rocket, drop. Well, dollar's gonna rocket.
Yeah, I will say I'll probably be spending most of my time this week when I have free time at work, just looking at the USD JPY and not SPX.
It's so exciting.
Yeah, it's so much.
I'm also watching the 2-year and the 10-year very closely. Because the 10-year has moderated, but the 2-year looks like it's gunning straight for like 5.25.
Yeah, I don't know. I don't think the 10-year's moderated. I think it's just flopping around, right? Because people really don't want it to go higher, but it needs to go higher.
Well, we lost a bank this weekend.
Yeah, a little teeny tiny baby bank, but it was already a penny stock. Like everyone was expecting it.
But that's the canary in the coal mine.
Well, sure.
Yeah.
It got me excited, but I try to downplay it because if you don't, people just are like, oh, look at him getting excited about everything.
Everyone will just short the bank index on Monday and get blown up.
Yeah.
When the market realizes that the failure of a tiny bank means that the big banks still haven't failed, and that's super bullish.
Yeah.
The concentration of wealth is always bullish.
I love getting passing analysis through a bunch of filters of bullshit. It's like, oh, inflation's hot and growth is down. So that means that yields should go up and dollars should go up, right? But in the current environment, it means that somebody's going to short dollar and short and long treasuries, right?
Yep.
Because
China has to save the yuan.
Yeah, it's all fun.
Yeah.
One thing that I was interested in, I'd like to get some opinions. The DTCC is haircutting again.
Yep, I heard they're haircutting all the Bitcoin funds.
They're haircutting all the Bitcoin funds.
People are
100%.
actually, I'll let you know that asset managers are like the two guys I know that do enough blow to get that job, are very worried about this because
Really?
they've both allocated, one of them allocated 8%, and the other guy allocated like 5.5
Are you
into the
kidding me? On
BTC
Bitcoin?
ETFs. Yeah.
How much do they have in cash?
Not. They've some treasuries, like some short-term
Oh my
treasuries.
god.
I don't think any of them have any cash. They never do.
Oh,
It's so weird
yeah,
to have
I
cash
know.
positions as an
Well,
asset manager.
you know
It's
what I
like you're
mean when
not
I
doing
when
your
I
job.
when I say cash, I mean
Same as cash
money.
securities.
Yeah,
Not
money
enough to take
market.
a 5% hit on leverage.
Oh yeah,
But I
that's
mean,
crazy
no,
to
they're
me.
like they were bitching because their clients are demanding it, right? They're back when Bitcoin hit like 60 and the ETFs came out, everybody's clients were like, "We want some of that shit in our portfolio," and they're like, it's really risky," and they're like, "No, we want some. Why aren't you guys?" Because that's what happens, right? Is like
Yeah,
all the
yeah.
clients start calling up and they're like, I noticed that you guys are managing 20 million of my dollars and none of it's exposed to this asset that's up 1,000%. What the fuck are you doing? Do I need to take my money out and give it to someone else? And then they're like, "Oh no, we're totally gonna get some of that." Even though it's shit and it's risky. I mean, that's what happens every time you get a speculative bubble, right?
Yeah, for sure.
This is why I don't ever want to have clients that have any kind of sway over the fund because they're idiots, and but you're forced to listen to them.
Yeah, it sounds awful. There was another line item on that DTCC haircut though, and I forget what it is because everybody focused on the Bitcoin. There was something else that had a increased haircut as well. I don't know if we can find the DTC haircut document.
Collateral valuation for corporate notes, bonds rated B1 to B3, will be updated to use a haircut value of 70%, up from 50.
Nice.
But this isn't going into an effect until Wednesday. So,
Yep, I thought it was
or
Tuesday.
Tuesday.
Yeah.
Well, I can't remember with the DTCC
Yeah,
if it's.
sure.
I think it's
Give
like
it a day slop.
end of day on the 30th when margin requirements are calculated.
Yeah, probably.
I'm looking at the haircut document from 2 days ago, filed April.
Yeah,
Yeah.
April 26th.
There's a bunch of haircuts in it. I mean, some of them
Yeah.
are bigger, obviously. Even stuff like treasuries and all that are getting little haircuts.
Yeah, leverage is high.
Leverage is high, but so is risk. Yeah, this is haircut season. This is what happened in September, right? After the August drop, everything bounced back. Rates were still going up, and financial conditions were getting tighter. And the DTCC haircut everything, and then we went down like a fucking rock in October. And then the Fed and Treasury pivoted and bailed everyone out again. They prevented 2 market crashes last year, and CBOE prevented one in 2022. So we've dodged 3 now. Wouldn't haircut make BNED 5 cents?
The market's
Don't
just
worry.
begging to crash.
BNED's leverage, like the amount of leverage you can get on your BNED is still just 0.
The haircuts are interesting. The timing is interesting of them too, right? I mean, like it's interesting that it comes out on the same day that yen tanks, right?
Of course.
It's just an odd coincidence. You can't call it a pattern, but it's an odd coincidence.
Yeah, I mean, I think it's pretty clear that risk is going up, right? And people are
They
getting nervous.
they leveraged the short vol back up to where it was in like 2 days.
Yeah.
After a solid week and a half of deleveraging, Vega exposure is now at all-time highs again, right? Like just snapped it right back. But the price improvement from that is significantly worse, right?
Yeah, and you still have if you're just looking at VIX, if you were to do some form of TA on the VIX, which we definitely wouldn't do because that would be gross.
Are we
But
talking about correlation? Because
no, just VIX. It definitely is still showing that it's a slowly growing, fundamentally unstable system that's just oscillating bigger and bigger at
yeah,
every oscillation. So we'll see how it goes. It almost ran away from them last week, and then they got it under control this week. But it's still they still haven't like pushed it down enough.
I think I'm gonna go
to, like,
long cash VIX again, just because it's fun.
yeah, it might not be terrible. I mean, I don't see them getting it much lower than 14.5.
Yeah, I think over the next couple days, I'm gonna see how much vol shorting comes in, but I'm gonna maybe pick up some
Yeah,
new
if they
Vega
get
positions.
if they get it significantly under 14.5, like all bets are off. They could just they might just be going all in. Hail Mary.
Aren't they already all in? More
I don't know.
than, and then they're getting haircut on top of it.
We'll see.
Yeah, that's what I'm wondering. Like, it's a big question mark with these haircuts and all this shit. If yen continues to tank like this, then yeah, they're going all fucking in.
I
They're all.
mean, the highs on like our yen swap would indicate that 9x is roughly the maximum leverage available in that trade, right? And if that's the case, then they're already there. They're already max levered on yen, and they're getting haircut.
Yeah, it'll be
Yep.
fun. I definitely don't think. I think they're going to try to push up. I think they're going to be more successful than you might think, just from zero DTEs, and everyone's just basically just going to be waiting for Fed speak middle of the week, so they'll use that lull to just push us up on nothing.
Yeah, I agree. I agree with you that they'll push up, but I think only if they can regain DN and GN. Don't we have like a bunch of charm that fell off?
I'd have to look at it.
We don't have any
Look at
charm
it.
on the monthly because that was like non-existent. But
We're
I
so
think,
close to we're so close to even on charm that it's.
I feel like
But we're also like right
we
at
lost like
DN,
5
GN.
billion in charm on the weekly.
We're also like right at DNGN. We're was it the weekly? I can't remember which one.
Yeah, we're right at resistance. They're both at they're like 50 97, 50 101. But the monthly GN is still way the fuck out of the money because they're selling the call side too. Oh, that was interesting. So Friday at about like 2:30, I realized that all of the 5100 calls were sold.
Okay.
And so I shorted like a bunch of in the money puts at 5110, and we just dropped like a rock into close.
Wait, you got blown out?
No, I made a bunch of money.
You said you shorted puts.
Sorry, I shorted SPX 5110. Bought 5110 puts.
I see.
Yeah. Ew.
Cool.
I don't sell in the money puts. I'm not a bull.
It's not bulls, Girk. It's vol bears. Okay.
Oh, whatever.
There's no bulls. There's only vol bears.
I'm only bullish on volatility. So yeah, we only lost 5 billion in charm, which isn't significant. So you might be right.
Yeah. There wasn't a whole lot that changed there.
Oh, do you know that SPX short vol hit new all-time highs? It's
SPX short vol.
Yeah, so Vega risk is
at
Vega.
Yeah,
15.12.
Yeah, Vega
now.
risk on the market as a whole too is pretty much near all-time highs, so it's like right there. So yeah,
that's exciting.
It's Vega all the way down, baby.
Meanwhile, Gamma Max is rocketing because they're so I think here's what I think. I think those like 5150, 5200 calls are all sold. And they're just shorting both sides of it to try to suppress vol.
Maybe that
So
could
they're
be
just
true.
doing like a giant short strangle on everything.
Yeah, maybe.
I think that's the only way they could
Because
have
I know
turned
that
the risk
calls
around so
over
quick.
calls over 5250 pretty much all dumped off. So, well, a lot of them dropped off. So anything long up there is just getting close.
Yep.
And if the stuff above us is sold, then obviously they could still squeeze it out as they're trying to short vol. But yeah, I don't see us going back. I don't see us hitting new highs anytime soon.
No.
What was really interesting was on Friday, of course, after Google and Microsoft had beat expectations, and I mean they had good earnings. There's always the question of how long are those earnings going to continue? Sure, but at least for the short term, they had good earnings, so pulls away. But what was interesting was obviously all the meme 7 ran hard on Friday. What, Nvidia was up like 5%?
It was ridiculous.
Tesla was
6.18.
Tesla was up, right?
Nope, down 1.1.
Okay, they were
Failed.
down a
Yeah,
little,
failed.
but
Failed to
it had
break.
already gone up a bunch.
Yeah, it failed to break into the like positive, like where charm was positive.
Amazon's up too, right? On the
Yep.
because
Amazon
people are
turned around hard.
anticipating. Well, people are anticipating that Amazon's also going to enjoy cloud growth like the others. But
Amazon's
anyway,
up
so
8% from Microsoft's earnings.
yeah, yeah, yeah. So like the mean 7 ran super hard, and what the SP? I'm not at my computer, so I have to like just guess, but I'm pretty sure the SPX closed pretty close to 1% up on the day, right?
Almost.
A
Yeah.
little bit over.
A little over.
And
I
the
think.
equal weighted
Yeah.
SPX was like flat.
Yep. Yeah.
I don't think I've ever. I've
RSP
been
had 0.05% return.
Yeah, I've been watching that pair for a really long time, like way more than I should. I don't think I've ever seen a divergence that large on the intraday between those two. That was insane to me.
How did IWM do?
I think it did. I think
It
it was
did
up
okay.
for some
Yeah,
reason.
almost 100 points. Dow was about half that though. Dow was at 40. So yeah, not a lot of
Yeah,
breadth. I mean, it's the whole pump was like NQ anyway.
yeah, but it
Oil
was
ticked
just the
up.
meme 7.
Yeah.
Like breadth got worse.
Well, it's the only way the market can go up is if breadth gets worse because there's no breadth in the market.
Yeah, well, nobody wants to own everything else. They just wanna own meme stocks.
Well, yeah, the fundamental thesis the market is pricing in is that these 7 companies will own literally everything.
You know what was really interesting Friday actually was that core 1 month and 3 month, the two correlation indexes, they both rose despite like Mag 7 pumping. So dispersion broke down, but Mag 7 still pumped, which makes me think that that's going to mean revert really quickly.
Good.
Also, skew pulled back, so people dropped some tail risk hedging. And then bond vol was down again, which is also really strange given that dollar moved up.
Yeah.
Yeah, everything's like everything that should be correlated is like really uncorrelated right now. It's very strange.
Yeah, that's probably the most interesting part of it, is that existing relationships are kind of going skewy. Just either something's changing, which is always fun and interesting, or
well, the
something's
bond
breaking.
market's really heavily in disagreement with the equities market.
Oh yeah, I mean it's massive.
Yeah.
What's really funny is that people used to be showing this online like every day or every other day on Twitter back in like the summer of
What were
2023.
they showing? Like
And
AA, AAA, BBB spreads?
they were showing like TLT versus like inverted TLT, or maybe it was just TLT versus
QQQ.
SPX or something like that.
Okay. Like yeah, there's like 10-year tips and tech. Like 10-year
Yeah,
tips and
and
NQ. That's been
yeah,
fucked up
yeah.
for a long time.
Well, yeah, it's even worse now than it was
Yeah.
back then when everybody was posting about it, but no one's posting about it anymore. I guess they moved on. That's the thing about like the social media around finance. You can't stay on any one topic too long, even if it is the most important topic and it just persists for a long time,
Mhm.
because people lose interest. You always have to be jumping around to this new idea or this new thing you should be looking at or watching, and you just get like a lot of schizophrenic behavior.
That's like FinTwit in a nutshell, right? It's like just talking about whatever the hottest thing is.
Yeah,
even
like
though like really the focus should be on the same like the focus between yields, vol, and dollar should be all that anyone's looking at right now. Like fuck all the
yeah,
equities, who cares? Like that's all that matters. Is
well,
when does the equity market get bent over by the bond market? Yeah, I talked to
yeah.
Jamie earlier. Wait, why do you
I
care?
still
I don't even own Jamie
I still
properly.
publish my leverage stuff. You're telling me that I should just stop doing that? Because I considered just stopping it today.
Really? Are people not looking at it?
People are still looking at it, but I feel like people have definitely they've moved on, right? It's like the same shit every day. They don't want to keep
But
track.
it's so
So
valuable.
I figure I just put it up because
So you're
if
just giving
people
people
want us
alpha
to look
and
at
they're
it,
ignoring it?
I don't know.
Bunch of tools.
But I figure
I'm gonna repost it.
it's just nice. It's just boring. It's like every week
Yeah.
I'm like, all right, I gotta find a way to say something about this. I can't just post the pictures.
Just post the pictures.
Yeah, I should just start posting the pictures.
If they don't understand by now, they're never gonna, right?
That's true.
That's interesting how low put value
Once you want
was.
to take that, I'm sorry, ready?
Oh yeah, they always do that, right? I mean, like whenever they're trying to pump out of a hole, puts go down, and they just like load into calls.
Jesus fucking Christ, that massive bump in leverage ratio is insane.
Yeah, I can't tell if that spike was like just an artifact or if it was real that day, but it got a little scary on Thursday.
Yeah. Well, yeah, they keep getting. I mean, like they keep trying to rebuild the position. They keep getting shocked, and then it slips, right? And then they've got to lever up even more. Like every time it drops, they've got to lever up twice as much. Okay, why the fuck can't I don't see those calls anywhere? Did you pull the data before the expiry?
No, but I did drop off everything that expired on Friday. Did your data set do that?
Maybe not. Maybe that's the difference.
Yeah, that could be.
Yeah. I'll double check after midnight tonight.
Yeah.
That's important. If there's still a bunch of out of the money calls, I thought those fell off, but if they didn't, then
Yeah, we
that
should at
could,
least try to resolve the discrepancy, figure out
yeah.
which the issue is.
Hmm.
Soon we won't have to rely on anybody else's data. That'll be nice. Then we'll know what all of our assumptions are. Too much? Too soon?
What's the best way for the less smart amongst us to watch the USD? Why don't we include the plebs and let them ask some questions?
Yeah, we could
We
try
don't do
that.
that enough. We just ignore everyone and mentally jerk each other off until completion. I feel like
Are you trying to say that I'm not enough anymore?
no, I'm not saying that at all. In
You want to
fact,
bring more people into our relationship to spice it up?
I mean, only if you're down.
Let's give it a shot.
They're talking about GME in chat. This is pointless. I shouldn't have
no
even
G,
looked.
yeah,
God,
no GME.
gross.
GME is $10. Who cares?
Yeah.
Sometimes it's 11. Sometimes it's 10. It's worth like
Over-
one.
Everyone complains that they have like $1,000 in their bank account, yet somehow they're over leveraged on GME. I don't get it.
Oh, so there is a good question. Someone's asking if there's any update on the secret project. Progress is being made.
Oh, what secret project?
I don't know. He asked about a
Uh,
secret project that someone.
Who asked
the
about a secret project?
DDS DD.
Oh, the secret project. It's getting closer to realization.
We're hard at work. Let's put it that way.
Yeah.
I'm hard at
Hard
work.
and
Jay Fresh is
hard.
not.
He's no. Dork is hard and working.
That's the only way I work.
The secret project that's going to help me make money. Now, don't get ahead of yourself, Jen. Okay. Maybe.
Yeah, there's no such thing as free money.
Yeah.
It won't help you make money. It'll tell you why you lost money.
Win more pigeon wheel perks. They're coming. Who's the best looking analyst on the panel, and why is it JFresh? It's because he's a ginger
Wait.
and he's exotic.
Which panel? Yeah.
That's
okay.
why we brought Dork on board because his native heritage counteracts that, and then Dork can sometimes be more exotic.
I'm a little exotic.
Yeah.
Not very. I'm like vanilla bean versus vanilla.
I mean, that's a huge difference. One of those things comes from a beaver's butt. The other's, an orchid. Any thoughts on Snap? Do we have thoughts on Snap? I don't have a significant other to cheat on, so I don't use it very often.
I'm sure people are gonna do all sorts of like degen ideas with the risk of TikTok getting banned.
It's
and
up.
maybe Snap and Meta and all that stuff are gonna get swept up into some weird shit like that. But who knows, right?
They beat on earnings and they're up like fucking 27% on Friday.
Oh yeah, you definitely didn't miss the run though. Still a lot of meat on that bone.
Yeah.
He's being facetious, you guys, in case you couldn't tell.
No. You always chase. There's always more. There's always a little bit more. Always.
Have you learned nothing from Nvidia, Dork?
I guess that's true, but this isn't a meme 7 stock. This is a non-meme 7 stock, which is probably going to go straight down.
No. It has tons of unverifiable potential. This is the perfect target. Yeah. You're forgetting about innovation.
Yeah, no, if they buy like 2 A100 processors, then yeah, they're going to the moon.
They don't even need to buy the processors. They just need to promise that they'll create AI bots that sext you and send you nudes.
They need to, the trick is you need to waste a shit ton of money on processors you don't need. That's the trick. But you have to burn the money. You have to have the capex going straight into AI on the books, so that way people realize that you have a price to AI ratio that's too low, and they need to put it around 420.
I haven't seen any.
Speaking of capex,
yeah,
all the big boys seem to be still seem to have quite the appetite for H100s and G100s.
I think what we're seeing now is Nvidia's earnings just being paid for. Right?
I mean,
aren't we at that point in the cycle?
So the price to AI ratio, what happens is for every dollar of capex you spend on AI, you get an extra $2,000 of market cap.
Well, not in Meta's case.
Well, yeah, but I think everyone realizes Meta's a terrible company.
You know why people are bullish on Tesla? Because he's promised to spend money on AI, but hasn't. See, investors aren't going to like it when the money is actually spent, which I think is what Meta shows us really well. They like the promise of money being spent.
Wait, you don't think negative $2.5 billion in free cash flow was negative for Tesla? at least $1 billion of that was chips.
Hmm.
Well, don't forget, if you don't think that Tesla is destined to sell cars, or if you think that Tesla is a car company, you shouldn't invest in them.
That's what
Yeah.
Elon said.
Yeah,
Yeah.
so, I mean that's the,
I thought it was so funny because not only did Elon say that, but like everybody else in the C-suite on the call like was like in agreement. They're like, yeah, he's right.
You don't think he would have surrounded himself with simps by now?
Oh my god, it's so funny. And then that like the national highway was NT or NHTSA or whatever, the National Highway Transit and something
Yeah.
authority, who that safety authority. They came out with like this scathing review of autopilot. I guess it wasn't like the newest version of FSD, so like people are pushing back on that, the Tesla stems, but like they basically came out and said their autopilot is worse than everybody else's autopilot and is directly responsible for a large majority of the accidents that have occurred that a human would have otherwise been able to prevent,
Here's what I think is
including the ones that
responsible for
resulted in deaths.
a large number of accidents that have occurred due to FSD is people turning on autopilot and then going to sleep.
all I want to do.
Probably, yeah. But that was like part of the review, is that it didn't do a good enough job of confirming that the user was paying attention.
Yeah.
Like I was in a car that had like, lane control and stuff.
Mhm.
My buddy rented it the last time I was out of town, and for some reason they gave him like a Cadillac Escalade like Max, had like every single bell and whistle on it, so we got to play with it. But he was like, even when he was still attentive, the thing was so finicky that it would like lock him out of it every
Yeah.
once in a while.
I have that in my car. If I like move my eyes away from like the heads up display, it's like, oh, you're not paying attention. Why aren't you paying attention? Bing, bing, bing.
Yeah. So
I want to rip it out
But they
so
don't-
bad.
but they don't have any of that stuff, right? They're just like, whatever, as long as you're touching the wheel, maybe.
This isn't macro. You're not macro, Sisyphus. No one wants to listen to you talk about gold in Brazil again. All right.
Here,
You
Gert,
need
I
to
got
get some.
There
You
we
need some
go.
new meds. What? Oh, thank
I
you.
This
got
is
it.
macro plus.
You guys
Don't
have
worry, I got
you have no idea how much stress you and Carl save me by randomly timing people out.
It's the best.
Yeah, it's huge. It makes a huge difference in my mental health.
I mean, like macro wise, we got a lot of interesting data, for sure, but we need
I
to
think we
establish.
already talked about a lot of it.
Yeah, we talked.
Yeah.
I mean, shit's fucked. And this is kind of what I went into on Friday. That everyone wants me to repeat 900 times because it got them all jacked up. But like this bounce is not the same as like our bounce in December, or like our earnings bounce in when did Nvidia save the market? It was like Feb. Like this is not the same as that. We're in a way different position, both among the central banks, with inflation, and with like how they're gaining this leverage, right? Like previously, yields were dropping, financial conditions were easing, leverage was becoming more available, and so they were maxing out their margin risk in an environment that favored increasing leverage, right? And now they're maxing out their margin risk in an environment where leverage is falling off a cliff, and their same as cash assets are devaluing rapidly. So this is drastically different. I don't think it's bullish at all. Like I think we're bouncing a bit, but it's not a healthy bounce, not by any means. They're bucking the system really hard to try to achieve this, and if they fail, it's going to be terrible.
Yeah, I mean, all you have to do is look at interest rates from the October bounce, right, and what they're doing now, right? Like, unless we get a huge cut narrative coming in, this bounce is not going to have legs.
Yeah,
Like
kind of like
the narrative is totally different.
artificial dead cat bounce. I mean, it's like the thing everyone makes memes about, right? Like the market cycle. Right? All of you, I'm sure at this point, have seen that fucking chart where it's like you have like peak euphoria, and then the market pulls back, and then it starts to recover, and all the bulls get trapped. Like this is literally that scenario.
Yeah. Yep.
Yeah, and you know what's funny here? The funniest part, right? I want to correlation that we should make as well. This one is going to be way more revolutionary. Okay, we need to We need to make a correlation chart between economist optimism and SPX performance.
I feel like with economists, the variance is larger than the mean. Like there's just economists that are naturally positive and economists that are naturally negative, and they just like never change. And they also their theories are bad.
Those are going to be outliers. I think that for the most part, the distribution is going to look like a perfectly R squared equals 0.999 line between SPX price performance and economist sentiment.
Yeah, but is it a leading or lagging indicator?
It's neither. It is an exactly right on time indicator.
Yeah, and it's just telling us what we're already looking at, right?
The economists are really good at saying SPX had green candle, but they're saying it in economic
I
terms.
see. So you just want to dunk on the economists and say that they're as bad as all the fund managers and stuff who are trying to be.
It's the same people.
Yeah.
This shit. This is it, right? This is like what we're looking at. The lower high.
Yeah, we'll see. I mean, if it's going to be lower high, I mean, the reversal is going to come by Wednesday, right? Or on Wednesday.
Yeah. Well, no, not
I mean,
necessarily. It could be a couple
Wednesday's
weeks.
a
It could be a
target,
couple
yeah.
months. Yeah.
I think it all depends on Fed narrative.
Yeah, I think it depends on the Fed, and if the Fed is... I don't think the Fed's going to be ready to shift their stance to hawkish till June. They're going to want 6 months of rising inflation before they come out and tell everyone, hey guys, we were fucking wrong about everything. We fucked up really, really badly, and we've got to fix this right now. Like, right? I mean, that's what they're going to have to say. And in order for them to say that, they're gonna want absolute certainty that they were fucking wrong in every way, right?
Yeah. I think it's definitely a needle to thread because I just don't think there's enough juice in the economy to really get inflation to like start pumping again. But I think that there's just enough consistent juice to keep it at like 4% over the long term. And so it's going to take, I agree, it's going to take more time, maybe even up to like 3 months more time to really start to say, okay, this is materially going in the wrong direction for sure.
That's true.
Until that point, right? Until it becomes what, as Kirk described, as like abundantly clear, they can just say it's a bumpy ride down, right? And they can get a lot of mileage out of that.
They're already getting, I think, more mileage out of that than they deserve. But yeah.
Not in yields. Yields are not on that mileage.
Well, the bond market doesn't agree anymore, right? The bond market doesn't believe in the Fed.
It's starting to get pretty tenuous in the bond market.
It's a big problem. It's a big problem for... I mean, we've got, what, QRA coming up, right? And if Yellen's going to have to make a pretty big decision going into the second half here. And then, you know, and the Fed decision, right? And those are both going to have a pretty significant impact on what the bond market believes is going to transpire. I mean, you know, it was actually really interesting. Did you see the tips auction like a week and a half ago, a week ago? The
No.
5-year tips like doubled. Like inflation, like break-even inflation expectations are sky high right now.
Oh yeah, I believe it. I mean, I think everybody's getting on board with, you know, if the federal deficit's going to be 7% of GDP going forward, then and GDP better be at least 6 or 7%, and if it's much less than that, we're in even bigger trouble. So like a 10-year yield of 6%.
1.6% for Q1 doesn't put us at the GDP we need this year.
Well, in GDP overall is like around 5.
Nominal growth is super high, but fucking realized growth is not, right? And what we saw there with this last GDP report on Thursday is that nominal growth is just feeding inflation. It's not returning, like we're not getting the returns on that government spending that we should be.
Oh yeah, for
And
sure.
that's
But
really bad. That means that we're levering debt into inflation, which is a spiral.
yeah, no, I mean nobody. I don't think anybody disagrees with that. I think most people are just they're still telling themselves that they have more time, but I think we're starting to run out of that time. When do you think we get another downgrade? Seems like we should be close to due for one.
I think we should have one already, honestly. But it'll be, I think the Fed and the QRA will probably be the influence, right? If the Fed hikes, they'll prevent a downgrade. If the Fed hikes before June, they'll prevent a downgrade. And then Yellen needs to start selling more duration. We've got to accept that a soft landing is out of the picture. We've got to push for a recession. I think the Fed's going to have to turn that narrative around in the next 2 meetings. Otherwise, the bond market's going to do it for them.
Like I've said,
And if the bond market does it for them, it's going to be far more violent.
like I've said, rates will continue to rise regardless of Fed policy.
Yep.
Yeah.
Yeah.
Fed's not doing anything.
No.
Yeah. No, that's the thing is they need the bear steepener, right? Like we if this is our current trajectory, if this is our long-term trajectory, we need the bear steepener in order to have a sustainable path forward. Otherwise,
I feel like
we're
you
just going
just
to build
really
more
tried
violence.
to put Bear Steepener into this conversation again. And whatever punishment Jay Fresh thinks is suitable for this behavior, I'm fully in agreement with.
You know what?
I don't understand why.
Both of you can fuck off, okay?
You just spent 3 hours trying to figure out how to work Bear Steepener into our goddamn conversation.
Yes, that's exactly right, Girk.
But
you know what?
they don't need the Bear Steepener. It's not I mean, it's not entirely accurate, right? They need the top end of the curve higher in order to tighten lending, right? They don't actually need the Bear Steepener. They don't even need the yield curve inversion.
No, if we're talking about deficits growing 7% of GDP, then we do need the bear steepener. We need long-term.
Yeah, but you're describing a specific type of curve that takes into account the relationship between the short end and the long end. All you really need to say is we need the long end to go up.
No, we need the short end
not
to be low too.
Do we?
A little bit.
Why? Why do we need the short end?
So that way we disincentivize short-term facilities like money markets from being the primary go-to thing, right?
Even
that's
if
but
that's just based on Fed policy, right? That's based on the Fed's overnight rate. That has nothing to do with the short end.
Well, the short end has a lot to do with the Fed's overnight rate. It's got to be fairly tightly correlated.
It's just going to stay flat.
Exactly.
They probably would prefer the short end go up to insulate against volatility later, right?
But the problem with that is that you have way tighter access to funding facilities.
Yeah. But I mean, do they care? Do they want to hold everyone's bags?
No, that means they don't want stonks to go down. That's what I'm saying. If they don't want stonks to go down, they got to keep the short end kind of low, and then have the long end go above it and go to 7%.
I mean, stocks are gonna go down because of the dollar. They can't.
Yeah,
You
but
can't
not as
have
much.
both. You can't have both. There's no way.
If you can maintain liquidity in short-term lending facilities, then it's
So
not
you
going to
get
drop.
the Treasury to keep pumping out short-term debt and feeding the money markets while you let the fucking top end spiral out of control.
No, not necessarily. You issue long-term, right? Accept the higher rates on it. It's obviously a lose-lose, right? I mean, you really
Yeah.
ultimately, if fiscal's going to go out of control, at least make them pay for it, right? I mean, and this is ultimately what the bond market's going to do. I just posted a chart in our chat that shows kind of how the bond market since the beginning of the year has been transitioning, right? And this is precisely what we need in order to get our fiscal spend under control, is to really kind of kick Congress in the nuts about how fast our interest payments are going to balloon. Like it's a complicated thing, but the real reality is that, you know, honestly, everything with a duration longer than 5 years being under 7% is kind of trash to me with our current growth pattern. Like,
so you're just saying the Fed needs to raise. I mean, but that's not their
maybe,
only
yeah.
option.
Yeah. It is. I mean, they can dump their bags too. That would work, but you know, then they make
I mean,
stonks.
then they're just doing what Japan's gonna do anyway.
Exactly. Yeah.
Why risk their maturity returns and mark to market at a lower price when they can let Japan take the hit?
Why don't they just both do it at the same time?
No, the fucking liquidity would be destroyed.
Exactly.
You just crash treasuries. They're not gonna do that. Not
A
intentionally.
great reset.
No, not intentionally. Too many banks. All the banks would fail. I don't think there's a single bank that could survive that. That's like 2008 on steroids. No.
Yeah, it is.
They definitely just raise. They keep raising, but the top end of the curve goes up faster than the short end.
It's ultimately the outcome I expect if this pattern of behavior is maintained, right? It only makes sense.
We're so fucked. Yeah, we are.
Seriously, it's terrible to think about. Like the worst part about, you know, just
the
thinking
Fed
about
could be infinitely stupid and cut this year. In which case we'll get a downgrade.
They're not going to cut. I mean,
money markets will blow up, and the top end of the yield curve will still skyrocket.
Yeah, I mean, the worst part about all this is just that even in the face of tightening financial conditions, right? We, as a representative group, have decided that not only are we not going to cut back on our spending, we are going to double down in the face of it and continue to spend as if we are in a world war, right? Like it's just mind-boggling to me that is the reaction on the fiscal side to tightening financial conditions. You know, and
I mean, they had to do it to pivot the market, right? They had to feed the money market funds. Otherwise, their pivot in October wouldn't have worked. So, like, without the QRA, that wouldn't have been possible.
But what I'm saying is that you're ascribing actions with intentions, but what I'm saying is that those actions and their intentions were horribly misguided by some sort of modern monetary theorist argument that deficits don't matter.
No, they just didn't want short-term liquidity to crush as financial conditions eased, right? They wanted
that's a natural effect of tightening financial conditions, and we decided to go against nature in that regard. And all it's done is caused our entire system to just dig their heels in and lever more.
Yeah,
and it's just making it worse, and it's getting more volatile.
I mean, that was the point at which the Fed fucked themselves, really, right? I mean, even more so recently, but that was really where this broke, and they trimmed all the possible paths forward to two. And both of those result in significantly hard landings. And it's possible that the easiest route there results in a far harder landing than the path of austerity, right?
Yeah, it's just, and isn't that just so like this, the whole of, second half 2023 to now in 2024 has just been a clown fiesta of this
But they saved
whole.
the banks long enough to keep the fallout off of the Fed's books, right? Because now BTFP is closed.
But I mean, BTFP I thought was an okay idea. It made sense, and the way it was structured was really beneficial for the Fed. But the part that just
Well, it's
mystifies.
beneficial for the Fed as long as all the banks aren't failing.
Right, which a lot of them didn't, and so they ended up coming out the other
Yeah.
side
So the
okay.
bond.
Like,
So Yellen crushed the short term. Or Yellen pumped short term liquidity in order to keep the banks from over inundating the Fed with the need for liquidity, right?
yeah,
But that the whole purpose of that was to get to the point where they could close BTFP, right? And now the Fed has no exposure. Yellen's spending is inflationary, so she needs to pull back. And now the banks can just fail. And no one has to pick up their risk besides the FDIC. And let me tell you, if they have to do it at scale, they're not going to insure more than 250 grand.
you see this, and that's why it mystifies me, right? This whole thing, it's just, I don't know. Maybe it's because I'm zoomed out too far, right? And I'm looking at our patterns of behavior over the past 25 years.
Mm-hmm.
Okay. And what you notice, right, is a complete and total sort of subservience, right, to growth.
Yeah.
There is no alternative, right?
It's free money gone wild.
Exactly, but and it's just like the notion that discipline is something that is regaled to the individual, while the whole can be completely immune to a lack thereof. It blows my mind that this is what leaders, people you would expect to exemplify the epitome of discipline and logicality. Instead, it is the exact polar opposite, especially after 2008, when ZERP really showed its power in juicing growth to the bejesus.
Yeah.
Ever since then, we have just completely binged on it nonstop because the growth that it gave us, right, it was incredible and it felt good, and then it quickly became the norm, and now we're just a functioning addict on this easy money. And now we're JPOW tried. Yeah, obviously he was late to the party because he's also, it lacks a lot of discipline in this regard, but he tried to tell the global financial system and the fiscal side, hey, we need to do something about this out of control spending that we're doing. Otherwise, we are just going to ramp inflation to the moon, because of currency devaluation. And in the face of that, because we are functioning addicts, we instead, and so, the taper tantrum, right? That was
Yeah.
one reaction. 2022, that was a reaction, right? And the taper tantrum, quickly they gave their ground. Now they're not so much, but even in the face of a Fed that is not really wavering in their cuts, even though their narrative shifted for a little bit, our decisions as a collective group have been to continue to not only be irresponsible, but even more so in the face of what is being put in front of us in terms of the cost of our irresponsibility.
Well,
It's
I
just
mean,
mind-blowing.
yeah, and if you look at a more micro focus over the last 6 months, I don't think that the Fed and the Treasury sat down and thought, okay, if we do a soft pivot here, the market's going to price in 7 fucking rate cuts for 2024, right? Like the market's immediate assumption, almost immediate assumption in November and December was the Fed is going to cut rates before the maturity wall, right? And that's what they
Yeah.
immediately priced in. A huge number of rate cuts. We would have had one at every meeting this year plus an extra one based on what they had priced in. We're still fucking pricing one cut in, right? Like, so the market, I mean, yes, the market is built around feeding off of that free money, and the market's assumption always jumps to that free money will be available. But now it's really not. There's nowhere to get it from. We've maxed
Okay.
out the credit card, and I mean, like, that doesn't mean that the Fed's going to start marking to market securities, but it means somebody's going to have to. And that's going to either be the banks or Japan, right? There is no way around it. Debt needs to be repriced.
Yeah, and no one wants to do it. I mean, you see it in CRE, but like CRE,
Barely.
as crappy as it's been, CRE is just that is the blip, right?
It's, well,
CRE is the
CRE is
absolute blip.
still asset backed, right? So you have,
Yeah.
I mean, with MBS and CRE, unless you have collateralized note obligations, which are growing pretty rapidly right now, and that should be a very big concern to everybody. Outside of the effect of people leveraging up the potential success or failure of those collateralized obligations, there should be some stability in those markets guaranteed by the value of the assets in the underwritings, right? But that's not what we're talking about. All this leverage and all this money isn't going into the real estate market, right? It's not
No.
going into, they're trying to lend as much as they can, but people don't want to take on loans at these rates, right? Because the general public is used to low interest rates now. Nobody's looking at a $500,000 house at 8% over 30 years and going, that's awesome, right? There's a
Yeah.
few. There's still a lot of morons out there, but I mean, the
Me.
vast majority of people with some financial sense are like, I'm gonna wait. I'm gonna bide my time, right? And this will, correct a little bit on one side or the other. And I think even people who don't understand finance that well intuitively feel that way, right? Like, why would I spend more on a mortgage payment than I'm paying on rent, right? And all of that interest is front loaded in my mortgage, so I'm not getting any, any collateral built up or equity built up in my asset for years. And that's causing people to wait. And so you still have cash buyers that are driving the market, but I mean, you can just look at the mortgage data the last few months, and we're not getting the home loans or the bank earnings. They're not getting the home loans that they need, and in
Yeah, you
order to
said
keep
boomers trading houses.
in order to keep pumping out those big MBS packages. And so instead of that, they've turned their focus to equities, where valuations are they're not tied to any real world metric at this point, right? So you can pump them to the moon because they're worth as much as people believe they're worth, and people believe they could be worth much more than they currently are. And while there should be some equilibrium in the market and something to tie things to rationality, for periods of time like this there doesn't have to be. And so equities are the obvious choice until financial conditions tighten, right? And then holding a shitload of risk assets becomes a huge problem very fast.
Yeah, and the craziest part, right, is that it's all predicated on, this idea, right, that they're the boogeyman, right, the anti-boogeyman, the soft landing, right, right around the corner. It's coming. We're soft landing right now. This is what it looks like. We're doing it, right? But that's just denial incarnate. And but the anti-boogeyman is almost entirely being expressed purely in equity prices, nothing else.
Yeah.
Literally, like, I mean, like, you look at treasury
Well,
yields.
it was
Right?
being expressed in equities and bonds, right? But now the bond market is saying no really
Yeah,
loudly. And the equity market is still 3% from all-time highs. Not
yeah. You
even
look at
3%,
commodities,
right?
right? Commodities are saying that we're not running into a soft landing. I mean, you got commodities saying no soft landing. You
All right,
got the
3%.
treasury market saying no soft landing. I mean, gold, right, is just fucking through the roof right now.
Mm-hmm.
And but at the same time, right, those warning signals, rather than being heeded by the market, instead, right, the pricing being expressed by the equity market is one of not only euphoria, but it's the market and this is goes back to a discussion on the SPX channel. It's gooning. It's in a full-on gooned up state where it is like it has transcended all thought and rationality, because any single slight touch to it produces such an outsized sensation for the participants in said market
I can't believe we're
that
using gooning to describe market mechanics. I
dude, the
love it.
market is
No, don't get me
gooning.
wrong. I love it. Yeah, edge to the
Don't
point of
stop.
oblivion.
Yeah, it's like
Don't
it's so
stop.
edge that, like, you saw with the Google earnings, right, and Meta earnings and all these things, the slightest impulse to it just sends it into just this insane cascade of reactions of flows of money that it is mind-boggling. And that's sort of the effect of this overcrowded trade in equities. It's ridiculous how huge it is.
Well, I mean, this goes back to something Jay Fresh brings up a lot, and that their hubris and that they will be bailed out, right? But
Yeah.
the thing is their hubris is also like the idea that they suffer no moral hazard has gone from 2010 2008, where it was like, oh, if we fuck up really bad, the Fed will bail us out, to the current system where they expect the Fed to react to bail them out ahead of the fuck up being realized. And that's what happened in March, and that's what happened in October, right? Was that the Fed and the Treasury acted in advance of the failures, right? They like everything else get their data faster, right? Like the speed of information has improved across the board, and so they are ahead of the potential collapse, of the potential tail event, or bank failures, and they are working actively to prevent them from happening, which means the banks can continue to act in a manner that is um unsafe for their depositors, and extremely, and
Antithetical to banking, you mean?
yeah,
Yes.
I mean they are all acting as hedge funds right now. They are not acting as banks, not by a long shot.
Yeah.
And they expect the Fed to keep stepping in front and diverting that momentum and saving them again and again and again. But by the Fed doing that, and I think the Fed has realized this, they are just facilitating that risk on, right? That's all the Fed has done since 2021, 2020. Yeah, fuck that. 2018 is just facilitate more and more risk on behavior from our largest and what should be our most stable banks, right?
Yeah, that's also part of the whole part that boggles the mind. Like, how do you as a leader and someone who should exemplify discipline and logical reasoning and risk assessment go and look at this and say, "Yep, this is exactly what I intended as a structure for our financial system."
You sound like such a 20-year-old. It's disgusting.
Well, dude, I am not even close to communist. All right, calm down.
No, that's not what I'm implying. You're disgust at people acting like assholes. You, yeah, I guess I've just, as you get older,
Because
you just accept it. You're just like,
I am,
people are all stupid and
I'm
act
still, yeah, I
like
guess
assholes.
I'm still illusioned by the mainstream depiction of a leader being somebody who we can trust and look up to, whereas the reality is that our leaders are just as stupid as we are, if not worse.
No, the gold
They're
standard was
absolutely worse.
stupid, Dave. Don't bring the gold standard into this.
Yeah, gold standard is retarded.
The thing that
Sorry,
allowed this was the dissolution of Glass-Steagall, right? And it's been
Yeah, seriously,
far more recent than Nixon.
that was
These
probably the
banks
biggest
should
fuck
not be
up.
allowed to act in this way, and that's why they're all pushing back so hard against Basel, because Basel's really restrictive, and they don't want any part of that bullshit. They want to keep making money hand over fist because that's what their shareholders demand, and that's the path that the Fed and the Treasury have allowed them to take for a decade.
Yeah.
And we're now at a point where, I mean, I'm not wrong. Like banks are leveraging up on high risk trades in order to keep their margins maximized in an environment where the value of their assets is collapsing.
Yeah, I mean,
And
like,
they fully expect the Fed to come out and protect their bad decisions. And
Yeah, that's the most
the Fed
infuriating
has
thing. Yeah,
continued to do that.
that's
But if they
definitely the most infuriating thing. You're just watching these people do. You know, it's so obvious to us, right, that people are making extremely risky, extremely outsized bets. I mean, borderline manipulation, and the Fed is just rubber stamping all of it
yeah,
and backing all of it, and that's
but
the most frustrating part.
I mean now the Fed's trapped, right? The Fed doesn't have there's no policy decision the Fed can make now to continue protecting the banks. They could provide them with all the liquidity in the world, but the risk is already palpable enough that the bond market is not going to ally themselves with the Fed anymore. And once the Fed loses control of the bond market, once there's no more faith in our central bank, and it's already like basically at the breaking point, it doesn't matter what the Fed does. It doesn't matter if they cut or if they raise. I mean, if they raise, they keep it going a little longer, right? But I mean, who's to say that that's not just going to incentivize the banks to do more of the same?
Yeah, it's just gonna make everything worse, right? It's gonna make inflation
Yeah,
worse.
they have to shock. There's just not another
Yeah,
option. How are banks
yeah,
exhibiting
yeah.
risk on behavior? Too much lending? Too much margin lending? Look at the
yeah. So
margin ratios.
to,
They're fucking
to discuss that,
ridiculous.
so like let's just say you're JP Morgan, right? And this is purely hypothetical, but let's just say you're a big giant GSIB, right? And Joe Schmo's family fund comes to you and says, "Hey, I would like to short the tits off of volatility," and they're like, "Great." But you don't have enough collateral for that because your portfolio is 100% junk bonds. So here's what we can do. We are going to enter into a collateral swap, right, where you go ahead and use the collateral from our treasuries as your collateral, and then we can get you all that margin you need to short the bejesus out of volatility. Because I understand that it's yielding 50%. Like, yeah, let's go for it. Let's get you into that and lever into it.
Yeah.
So we're going
Yeah.
to go ahead and give you good as treasuries collateral for your junk bonds that are on BBBY, and you can go ahead and do that.
This fucking Pulte was doing it all along. Son of a bitch.
Yeah, I mean, I was only half joking a couple weeks ago when I said the risk-free rate is 70% a year.
It's so true. I mean, and I keep harping on it, but dude, Jeff Y fucking yields 30%. Like, that's ridiculous.
I mean, it makes sense. Banks need to lend money, right? That's their function. And if they can't lend it in their largest markets, which have historically been real estate and corporations, right? They need to lend money in equities. And equity, that's margin, right? That's where all the margin's coming from, is from primes. And all those primes are taking those assets and levering them up in Japan. That's why that's why leverage is maxed out on that trade too, right? Is they're just maxing leverage like literally to the brink of collapse on everything.
Yeah,
Short vol, and you know that's like practically 1-to-1 with the margin on the carry trade. So as short vol risk is more realized, and you know every day at closing when they look at that spot VIX and they calculate everyone's collateral requirements, and then you see, you know, USD JPY swaps skyrocket. I mean, it's very obvious where the money's coming from.
100%. Yeah.
That's the only way to facilitate that. I mean, this isn't. I don't think anybody could sit here and say this is a natural market pump driven by fundamentals, right? Where the fucking market's up like 30% in 6 months. It's ridiculous.
We haven't had a market driven by fundamentals, I want to say, since the early 90s.
2022 did a pretty good job at trying.
It tried.
Yeah, it tried.
Yeah, it tried. It just tried.
Yeah, A for effort.
Yeah.
But yeah, it's so yeah, the whole situation just is. It's mind-boggling that this is what it has come to, right? Rather than accept the L, take the L, and you know, be more reasonable in the future, we decided to turn that L into a V and just rip face off of everything because of ultimately insatiable greed, right?
Well, yeah. I mean, that's the expectation, right? When you run a public company, your investors expect you to beat earnings every quarter. Forever.
Yeah.
Right? That's
It's
what our entire economy is built on. That's what investing is built on.
Yeah,
sort of.
It's like, I mean, in that sense, it's just leverage, right? I mean, over time, we all want a little bit more than we had before, and we're willing to risk a little bit more. So long as nothing's happened so far, we can take a little bit more risk because nothing's happened, and double of nothing is still nothing. And until we get to a point where we have no more financial flexibility, right? And that's
which is where
we're
at now.
going. Yeah.
It's ridiculous. It's just absolutely ridiculous. That's all I want to say. It's just stupid.
It is ridiculous, but why would you how could you expect anything different from this system based on everything we just discussed? If you try to be responsible, you are punished. If you do something risky and take on too much leverage, you're rewarded. It is you're an idiot if you don't jump in, right? And it's not until it just all falls in on itself that anybody, that the people taking risk lose. And even then, they might not be the ones that lose. They might be made whole and everybody else has to eat it.
Right, but like at what point, how many times does this need to fall in on itself before we realize that we need to have some sort of, like the repealing of Glass-Steagall, I think, was the beginning of the end, right? Like, but how many times do we need to incentivize outsized risk-taking before we realize it's a bad idea?
Until poor people start rioting in the streets.
I mean, until people stop
doing in 2020.
I mean, answer me this. Do you ever see a world where somebody with really nothing to lose would not spend like $250, $500 on a options contract that could net them 10x returns in a few hours?
No.
Exactly.
I do not see a future without
I mean,
that.
you know what was funny is the other day, like Friday night, before our meeting, I was like looking back at my trade logs for my taxes and stuff for the last few years, and I take I take like 30 times more risk now than I did when I started. And like honestly, most of the time it pays. It pays to just leverage up shit, even when you're wrong. Like, sure, you might take an outsized loss here or there, but the outsized returns are tenfold the losses, right? So it's just, why not? Like when I started trading, I never would have touched a zero DTE, even if they existed. Way too much risk, right? Like, what the fuck? Why would you spend that kind of money? You know, in an index that might gain 20 points in a day, right? But now the index just goes up and down 60 points in either direction and then closes flat.
Yep.
I mean, it's just everybody wants a piece of that. It makes sense.
Yeah.
You got some dipshit buddy who bought like a call on Nvidia earnings, and the next day they're 20 grand richer. They're telling all their friends. All their friends are like, "Fuck, I want to do that."
Yeah,
And
then it
until the
happens
system
again.
punishes everybody unilaterally, they'll never stop.
Yeah, agreed. We were pretty close last week, before the start of last week, and they just put everything into reversing it. But man, we had a real shot at going down. That would have been fun.
At this point, the risk is so high that like any actual correction is like incredibly dangerous to the entire global financial system.
Yeah,
Yeah.
Thursday was fucking dangerous.
Yeah. No, it
That's
was
when they
like
started selling calls.
that's the craziest part. Is like, but like that's the infuriating part for me is that the real economy and the markets are very much intertwined right now, way more so than they should be. Like if the market tanks, the economy is going to tank just because access to lending is going to tank.
Yeah. Risk assets
Yeah, well,
control
it's just
financial conditions right now.
something. I don't know. I've been trying to beat this thought down, but there's just a little bit of resentment that's been growing inside of me towards Wall Street, of just like kind of forcing us into this gambling, pyramid scheme environment just for our livelihoods. Like nobody in the middle class can realistically opt out of the Wall Street pyramid scheme. If you want to retire comfortably, you have to make your money work for you. And every year, if you're not taking increasingly more risk, you're just getting more and more left behind. And it's just kind of frustrating.
It sucks.
Yeah, there's no way around
Like,
it.
whatever happened to the idea of just like making enough money to be able to just save it so that you can use it later, and you don't have to like go like 50% tech stocks all the way up until the day you retire.
I mean,
Gone are the days.
companies used to, once upon a time, before we were peeled Glass-Steagall, companies used to just make money, and then like the money they made would then go to their shareholders, and their shareholders were like, "Well, this year wasn't as good as last year, but I still made some money off my investment, right?" But now all the money just goes to share buybacks, right? And so, unless your exposure is outsized, you can't take advantage of those buybacks because you can never shed positioning. So you just get trapped in this, in stocks that you can really never sell because they're up, but you can't benefit from the share buybacks unless you maintain the same amount of leveraged exposure, right? And it was a better world when you just get a dividend.
That's the
So
thing.
Yeah, I
what
mean,
I'm
that
really going for
makes
here
so
is
much more sense, right?
we should ban share buybacks.
No, we should just tax them. So the thing is a buyback gives everybody a tax advantage, including the company. We should like the thing is the buyback we've incentivized by making it a tax advantaged way of distributing a dividend, right?
Yeah.
They should be taxed at the exact same rate. And, the difference between them should be with the buyback, the company shoulders the tax versus the dividend where the investor shoulders the tax, right?
Yeah.
That should be the biggest difference between them, but they should be the exact same tax rate.
Or, hear me out, a world,
Alternatively, just tax advantage dividends.
I envision a world that's even more ideal than that, where the corporations don't really make all that much money at the end of the day net after paying all of their employees for the work that their employees did for them.
Whoa. Hold on. Now, that's a step too far. I'm not. You.
That's crazy, dude.
Son of a bitch.
No way.
Paying people for work?
Was it Google or Microsoft that said that they've initiated $70 billion more in buybacks this quarter?
Fucking communist.
Dude.
It's not. It's capitalism. You paid for your work, right? It's like if Google can
equivalent to the amount of profits?
If Google can buy back $70 billion worth of shares in a quarter, they probably should just be paying their workers more. And this drives me nuts too, because like I remember at one point, some company that someone I knew worked at, they're like a really big company, and they went to go buy a competitor, and it's like it made me so angry because if they have enough money to just buy a whole other competitor of similar size, then they probably should have been paying their workers a lot more.
It's like you hate people who are successful. I don't know. I can't even comprehend what I'm hearing right now.
Yeah, this is ridiculous, Jay Fresh. I mean, the thing is though, is with the share buybacks, the people who own the most shares of the company benefit the most from it, Jay Fresh. Have you thought about those guys?
Yeah, what about them? What about the people that worked so hard for their parents to die?
Shares?
Dude, like they're going to be suffering if we reduce the bonus they get at the end of every quarter. Okay, like that 10% bonus that Sundar Pichai just made is essential to his livelihood.
Yeah, and the style of living to which he has become accustomed. You can't just wrench away the things to which he's become accustomed.
Who is a McKinsey alum, who is a leech on society from top to bottom, all the way through to his bones, who's destroying Google.
Yeah, he is.
You just described the ultimate patriot. I want to.
But he did amazing things for Yahoo Search.
No, that wasn't Sundar. That was Prabhakar something or other. He destroyed Yahoo Search.
Oh,
basically completely destroyed it and sold it to Bing.
I thought that was Sundar.
No, that wasn't Sundar. But then this guy went to go work for Google in the ads department, and then pushed out the people who were actually in the search department, who were supposed to be not beholden to ads for obvious reasons. You don't want search optimized for ads because then you make the product worse. Those people got ousted, and then this Prabhakar person was put in charge of search. The guy who destroyed Yahoo Search is now in charge of Google Search. He has been for about 5 years. And no surprise, Google Search is now probably more than 50% sponsored content and SEO optimized garbage blogs, and almost no real content. I mean, I have to scroll more than like 2 entire pages just to get to like links to websites that I would consider to be trustworthy and high quality. It's ridiculous. It's gotten so much worse. And of course,
like
Sundar
a contender,
Pichai is,
I think, for Microsoft CEO.
And of course, Sundar has no problems with that as a McKinsey boy. He just sees profits, and if the company gets hollowed out, that's the McKinsey way.
It is, and you see, the thing is, Jay Fresh, that you're failing to realize is he is the ultimate patriot because now he is also dedicating his time to being on the board of AI safety. Okay.
Don't get me started about that.
He is
He is
doing
the
his
last line of defense between us and the AI.
Yeah, you
He's
don't
on the front
understand. He really
lines.
cares about us. He deserves that 10% raise because he cares so much that he wants to be on a board of governance over the technology that he is himself developing. That's so selfless. I can't believe that you would think negatively of this person who is performing regulatory capture on our behalf.
Yeah,
Okay?
it's disgusting that Biden's administration picked those people. It's like 80% AI CEOs. Just
Jfresh is gonna get
absolutely
Epstein if he keeps talking like this.
Oh
Dude,
god.
it's the great financial circle jerk. I mean, there's no way around it.
I
Like,
just want to know. I want to know how all this blows up because, I mean, their services are getting worse. And yes, I know that they're monopolies, and so they can keep this going for quite a long time. But their services are getting worse, and the costs that they're pushing on ad sellers or ad buyers is getting ridiculous. And at some
it,
point, ad
it
buyers are
blows up
just
when the
going to say,
economy
"This
tanks.
isn't worth it."
It blows up when the economy tanks. Like that's the reality. It's very tenuous, but it blows like once the economy tanks and the amount of revenue they're making. Like if we get a bunch of small businesses that use all their cloud shit, they just can't. They go bankrupt and they no longer are paying for those cloud services. All of a sudden, anyone who does cloud services took a huge hit to their revenue, right? If something like GDP drops, or falls by like 5%, there's an outsized effect toward these service providers, right? If small businesses, it's because they are the backbone of the American economy, the backbone of these giant tech companies, especially ones that offer online services and do their hosting and shit with their services. If they stop paying for that shit, then that house of cards falls apart, and with that goes their cash flow. They're very, very tied to the economy. And if you think about the numbers that they're producing relative to GDP, right, you get this insanely hyper concentrated economic output that is,
Yeah,
and
it's kind of ridiculous. It doesn't. It just doesn't seem rational that so many people are pumping so much money into these companies. Like, I mean, so many other companies must be having their bottom lines get destroyed.
well, yeah, I mean they are, but it's the facade is still intact because our economy is being pumped with fucking all kinds of money from all kinds of places. It's it's it's
Yep.
it's very shitty, and that's what I joke and I say that we are being priced for 7 companies owning everything. I'm only half joking because they're the only companies that right now in the eye of the equity market, at least publicly traded ones, they're the only companies that are worth a shit. But
I mean,
how is
we produce
companies that
what? Our NGDP's around 28 trillion, and
yeah,
they're worth about 12.5 right now trillion. So we're getting there.
I mean, yeah, that tells you everything you need to know, right? And the complete ignorance of everybody to the fact that yes, they are entirely dependent on that other 16 trillion or whatever staying where it is. No one seems to get that, right? If these companies are doing great, then there should be breadth. There should be a lot of breadth for how they're being priced, but there is not. There is zero breadth.
Yeah.
And so it makes no sense. It makes no sense, but the thing that really breaks it all down is when the economy starts turning down, and that's why the market reacts so strongly overall to these big tech companies doing okay, is because they are now the end all be all bellwether of the economy.
Yeah, I don't disagree with any of that.
It's fucked up. It's a giant circle jerk, and it sucks. And I hate it. I hate that these companies control all the content we consume. It's just the worst thing ever, and it is entirely un-American. But here we are.
Speaking
It'll
of
be
that, I
listening.
am kind of getting ready. Like, Google's getting bad enough. I'll probably continue to use Google Scholar because that one has avoided much of the like ad creep and stuff. But the like just normal Google has gotten bad enough that I think I'm ready for like a serious alternative. Because it's become almost unusable.
Have you heard of ChatGPT?
No.
They're basically Google.
Oh. Do they have ads?
You just got no. Well, yeah, yes, their stuff is still probably sponsored somehow. But the cool thing about ChatGPT is you have to prompt them at least 15 times to get the search result you want.
Oh, okay.
It's kind of fun. It's like a
But
game.
it's accurate, right?
No,
No. Not at all.
no, it's not. But that's part of the fun, right? Now you get to go and vet the information somehow.
It'll get more accurate over time, right? They haven't
No.
like run out of data.
Less.
They did for a while, but now they've really plateaued.
Well, those can they just use more data?
Nope.
What? There's no more data. What
They
other data?
used all the data already?
They used it
Yeah,
all.
they
Yeah.
did. Yeah. Well, oh wait, no wait. So what they can do is they can start recording all of our everyday conversations and storing those. So that's probably what they're going to do next is just hack all of our microphones.
How much are they going to pay me for my data? Sounds like that data is really valuable.
It is, but they're not going to pay you for it.
They're going to pay other people to steal it from you.
Yeah. Yeah.
Oh.
Yeah.
And then
Now,
they're
if you can
happening.
somehow find a way to steal other people's data, then you can get one leg up on the food chain.
Well then,
Yeah.
okay. So if I'm the one providing the data, then they must be offering me this service for free, right? They wouldn't sell it to me. They wouldn't sell it right back to me, would they?
It costs $20 a month.
Oh, okay. Huh. Interesting.
Don't worry.
Dude.
Once
I mean, it's
Are they
very
a public
simple.
company, and can I invest in it?
They're
yes,
not.
It's called Microsoft.
Microsoft. Okay. Well, Microsoft owns Bing.
They do.
So,
Yeah. And Microsoft's probably going to come out with some cool technology where we can use our minds to say things. And then that data is going to get put into ChatGPT. You don't understand. It's going to get even better.
Wait, hold on. I thought we had already determined that guy, was that like a 60 Minutes thing where there's like a guy who is like having a computer read his mind? I thought we determined that guy had a vibrating remote controlled butt plug and someone was just Morse coding the stuff to him.
I'm not exactly sure, but with the way technology is going, I would not be surprised if there is a really cool headband we get to wear, especially while we sleep, right? And what it does is it tells us some cool stuff about ourselves. That service is free, but what happens on the back end, right, is it gets transcribed and given to OpenAI to make ChatGPT even better, so their search results will become 70% accurate instead of 68% accurate.
worth it. And
Yeah,
what would that
it's
cost to
big-
roll out?
It'll probably cost every single dollar that's ever been made.
Okay. And then
Okay.
No,
better,
it's worth it.
but the returns on that must be exponentially high, right?
Well, yes, they will be. But the thing is, it's not just dollars, right? We also have to be able to contribute all of our drinkable water, okay,
Oh,
and all of our electricity. As soon as we give them those things too, along with every single dollar ever made, we'll have a really cool chatbot.
huh. Seems worth it.
I mean, yeah, and food too. We don't.
I
we
can't
don't
think
need-
of anything we're spending the money on now that's better.
No, yeah, no. It's purely the number one epitome of human advancement is a chatbot that is 70% accurate, and it won't get any better.
It might get better. They said they might be releasing GPT-5 this summer.
Oh,
Now
shit.
Everybody's speculating about that now.
Will it be able to
that's-
do
it's-
simple functions?
I don't know.
Did they invent
will
a
it be
new
able to
standard
count
for
to
it?
50? We'll find out.
Did they invent a new benchmark to say how it improved?
I don't know.
If I say
Um,
I want 2 potatoes, is it going to crash?
There's who knows.
Yeah, so if you guys haven't
But I'll
fucked
tell
around
you,
with
once
GPT
it
lately,
comes out,
if
I'll
you
tell
bring
how
up
high it can
potatoes in any sentence, it just hangs up.
count.
They
There's
don't
a
want to
high- yeah,
output
there's-
any information on potatoes anymore. Eh? They're blocking potatoes.
That's not entirely true, but it does hang up sometimes.
That's the
But that's
answer.
part-
That's the answer to. See, this is where Sam Altman is an actual genius and the Leonardo da Vinci of our times, is that instead of giving incorrect answers, sometimes ChatGPT just won't answer you at all.
And then you can say that it's because it has its own agency. I love it.
If you guys,
If it doesn't say the wrong thing, is it really wrong?
It's innocence by omission.
Yeah.
or Dork, if you start saying replacing bull steepener and by throwing in the word agentic, I'm gonna quit.
The treasury market is in an agentic bull steepener.
Oh God. J Fresh, I'll review your letter of. I don't remember what I was gonna say. Why did he do that?
Wrap it up. We should wrap it up.
I already drew my line for this week. Fuck you guys.
Yeah. Let's wrap it up. My line is, I don't know what you guys are doing. I'm just going to tell you now. Monday to like Wednesday before the interest rate decision, we're going to go up to 5,200. And then after the interest rate decision, we're going to touch 5,250, and then we're going to go down to 50 end of week.
Why didn't you just draw a flat line to 50-50?
That would have been less fun because I think we're going to go straight up and then straight down, which seems different than just flat the whole time.
All right. Dork.
All right. Okay. All right. We are going to open at 5,000.
What?
You heard me. Did I stutter?
Okay.
We're going to open at 5,000. And we are going to close the week at 4,750.
You son of a bitch. You see what he's trying to do, J Fresh?
I don't.
He's trying to get all the numbers from 750 up to 48.75, and then all numbers below it. You piece of shit. I don't like this. All right.
What did you guess?
There it is. Mine's just kind of like down a little tomorrow, and then like up a little into the Fed, and then like we dick around for a bit, and then we drop at the end of the week a little bit. It's kind of a flat line down with a bump in the middle.
So we've pretty much covered the gamut of all possible combinations this week, except for just straight up the whole week.
Yeah. Bulgark is going to project a test of 52.92. But I'm not drawing him a line this week. Fuck that guy.
Yeah, he's a dick.
Y'all are geniuses. I know. You don't have to tell us. We already know that.
So do you want the rationale behind my line down?
No. I wanna just
yen crash. That's all.
Too soon.
Well, if that's true, my gold is gonna skyrocket.
That's true, yeah. If yen crash, that's the line we're following.
No, I don't care. It's wrong. What's wrong?
You're wrong, Popcorn. Fuck off.
Popcorn already showed me his line for the week. It looked like this. It was just... It wasn't even going in the same direction as the rest of the market.
Wait, it went backwards? Damn.
Yeah.
He's a genius.
Gold dead? What do you mean? Hold on. I think maybe you're just soft in the head. So let me help you out here. Are you sure? How about that?
That's a lie. It's FUD.
This is a lie.
Yeah.
I've got some. Sorry, I wasn't. I've stopped paying attention because we've been doing this for so long. I might have some action, some fun little fodder here. Someone on Twitter told me that they got a presentation from Microsoft on how to get the most out of Copilot at their job. And they said it was a disaster. It was completely useless, and it stopped responding to prompts halfway through and never recovered.
Sounds like a
That was
Microsoft product.
That was from at Geezer Tweeter.
It's
Thanks,
okay. I'm
Geezer
sure
Tweeter.
once he gets back to work and productivity picks up a little bit, they'll push an update that crashes everything.
God damn it! I fucking hate this timeline.
What's your garbage meeting with my SEO company? Yeah. Did you win?
Wait,
No.
what kind of garbage were you guys discussing?
This is about AI and e-com. Ew. Oh god. Dude, do we really need to let racist child porn making AI write ads for companies? Actually, yes. This is,
Yeah, that
you know what,
actually
Dork,
might be
you're
more
wrong.
interesting.
This is the greatest timeline. I want
Yeah,
all
if
of
we
my
get-
custom ads made for me in real time based on my
Oh, yeah.
search criteria.
It would actually. It'd be
That'll
like
never
a lottery,
be
right?
a PR disaster for anybody.
It would be. It would be so much fun. You just never know. At any moment, you might get something that's absolutely ridiculous, and you can screenshot it and then share it with everybody.
Holy fuck, that's
It would.
so
It would actually
amazing.
just be super exciting. It's, you'd
This,
have always have something to look forward to. It's like, is it going to show me like a Shein ad with like a big fat dick on it accidentally? You
yeah,
might. You might
yeah.
see it.
That's
I still don't
exactly
know how to
what's gonna
pronounce that
happen.
company. Shein. Is it Shane? Sheen? Cheyenne?
Oh.
Shern?
Shine. Shine.
We're going to Shine. I
Let's
need to
shine.
know. My wife ordered some stuff from there the other day, and I was like, "What are you doing? That's like a scam garbage company."
Mm.
Sounds American to me.
Yep. I had an ex that bought all her clothes by subscription.
My wife tried that for a while. It was kind of interesting. It was really hit or miss and expensive, so she stopped.
Yeah.
Everyone was into it. Every woman was into it for a while.
Really?
Yeah.
I was like, why would you want new clothes every month?
It was like LuLaRoe pants. Do you know what those are?
No. Like
They were
knock
just
off
like
Lululemon pants?
basically they were just really shitty like tights. What we used to call back in like 2010, we would call those no pants, and now everybody just wears them and they've been normalized. But it used to just be really weird because
You know
women
what?
started
You know what's
walking around with.
amazing is that with all the feminist pushback over the years, somehow men are still figuring out ways to win.
Yeah, we're selling them pants that make it look like they're not wearing pants.
Yeah.
And they all wear them now. It's weird.
Yeah. But we're more respectful, which is what matters.
Yeah, I guess.
Yeah.
Maybe we're just nicer because we get to see all these butts and legs all the time.
Mm-hmm. I mean, imagine living in like I don't
Who's
know,
really socially engineering
1920
who
or
here?
Utah.
Who's really socially engineering who here? Maybe we're being placated and
Oh
manipulated
shit! I didn't
by
think
all the
about that.
butts.
I don't have time to think about that because I'm busy looking at butts.
Exactly.
Fucking interesting.
Yeah. I think the jury's still out on who's playing who on this one.
So, like all the girls at my gym that have just started wearing see-through shirts.
Yeah, they're thirst trapping you.
Fuck. I thought I was winning.
Mm-mm.
That's new? No, it's been going on for like 3 months now. I mean, I don't go to my gym a lot, but I noticed it the 2 times I was there in the last 3 months. Equinox? Everybody there is like a fit fluencer. It's the worst. I hate it. But I can't get out of the contract.
All right. Well, now that we're all thinking about butts, I think it's a good place to end it.
Yeah, that's a high note.
Definitely is.
And a low note.
Yeah.
Well,
And at the
All
back,
right, so you guys. So anyway, Dork put it in his butt.
I did. It was, and I got my money back.
wait, hold on. What? No,
You
you
were
know
gone,
what? That's it. This is over. Goodbye.
All right,
I'll see you guys
in 2
tomorrow.
hours. 2 hours.
Thanks for having us, Gerg.
Later, guys. Have a good night.
Yep. See ya.
Worst stream ever. Y'all guys have a good one. It was amazing. I don't know what you're talking about. It was, you know what you didn't like about it? Is that you didn't feel like it was catered to you, Popcorn. And I'm sorry for that. I wasn't there most of it. Yeah, because you were busy learning about how to customize your ad experience for the end user. This may be my last Sunday stream. Why, are you employed again? Congratulations. New job starts next week. Look at you. And here we all thought that wasn't possible. You're going to try and keep it. Is it your dream job? All right, so I'll see you during trading hours. Absolutely not. Wait, during trading hours? Or are you trying to it being your dream job? You know what? I don't care. It doesn't matter to me. Thank you guys so much for tuning in. If you have any questions, and I was unable to get to them, and it didn't look like you did, most of them were about, and they're not about GME, feel free to hit me up in my DMs until the end of the day, and I'll try to answer your questions there. Pickles Picks will be out tonight, and I'll see the rest of you fuckers in the morning. Enjoy the rest of your weekend, guys. Later.